Good morning, ladies and gentlemen. Welcome to the FirstGem Annual Conference 4.0. This is the fourth year that we're celebrating. We couldn't celebrate last year because of the pandemic, and so it's happening today. And this year, it's kind of different than what we would normally have. So we are engaging our virtual audience because, yes, we have to strike a balance now due to the pandemic. So yes, my name is Bisola Ayeola. I will be your host for today, and today promises to be really, really interesting. We've got interesting lectures from professors and professionals across different fields. The theme for today is the art of negotiation, and there's so many things that we can learn from negotiation. I, for one, I'm really eager to listen to all what our lecturers have to say today. First, I want to also thank First Bank of Nigeria Limited. Thank you so much for putting all this together for our gems that are now part of the FirstGem community. I would like to say a big thank you to you, and also to recognize the chairman board of directors, First Bank of Nigeria Limited, Mrs. Ibukun Awoshika. A little applause, please, in-house. Thank you. The board of directors. The CEO, First Bank of Nigeria Limited, Dr. Adeshola Adedunton. Thank you. The Deputy Managing Director, First Bank of Nigeria, Mr. Gbenga Shobo. The Executive Directors, First Bank of Nigeria Limited, all members of MANCO, MDs of all the subsidiaries, all group heads present, ladies and gentlemen. Now, so everyone that has joined us virtually, that has joined this webinar virtually, make sure you have your glass of water or food. You're in your home, you're at work, wherever it is you are, make yourself extremely comfortable, because there's so much that's going to happen today. There's going to be entertainment, and you can enjoy yourself from the comfort of wherever it is that you're at. The art of negotiation, I want to learn so much, and I'm sure you also want to learn so much. But for some people who don't really know much about what FirstGem is all about, just a little summary of what it's about. It's about empowering women and creating wealth, simply put. And I know that as at the last time I checked, we've had over 5,000 people that had registered to be part of this webinar, and they got access to the live Zoom right now. But so many people are saying, oh goodness, why did I procrastinate? Why did I waste so much time? I should have registered when others were doing this. Not too late for you. What you can do is to go to YouTube and type in First Bank Nigeria. You will see a live feed up, so you can participate on YouTube. But for our Zoom community, those who registered and are live with us on Zoom, you can send in your questions to all of our lecturers that will be here present today. Send in questions. We will try to answer as many as possible. And if we cannot answer all of them, not to worry. Answers will be on the First Bank portal. So make sure you send in those questions for everything it is that you need to know about today's theme, which is the art of negotiation. It promises to be an interesting day. I cannot wait to hear so much from all of our speakers from around the globe. And now I'm going to welcome the MD CEO, First Bank of Nigeria Limited, Ms. Dr. Adeshola Adedunton, to give us our welcome speech. A round of applause for him. Thank you very much.
Mrs. Ibukun Awoshika, Chairman, Board of Directors of First Bank, Directors of FBN Holdings here present, MS Cecilia Akintomide, Directors of First Bank, members of the Executive Committee of First Bank, led by the Deputy Managing Director of First Bank, management staff, distinguished ladies and gentlemen. It is my pleasure to join this year's FirstGem conference with the theme, The Art of Negotiation, which is in continuation of First Bank's month-long celebration of the critical roles and successes of women in our society. The month of March is recognized globally as the Women's History Month and provides an opportunity for us to discuss and profile solutions to gender parity issues and women empowerment challenges. One of my own favorite African proverbs says, if you educate a man, you've educated an individual. But if you educate a woman, you have educated a family and indeed a nation. Equally, I believe that if you teach a woman how money works, provide her with the right product and funding support, she can definitely transform the world. First Bank, through our FirstGem initiative, is committed to supporting contemporary women's financial services needs across the various stages of our life. Our FirstGem value proposition provides real solutions to challenges faced by female entrepreneurs and working professionals. Additionally, at First Bank, we are leveraging our agent banking proposition to close the gender gap and tap into the overlooked base of the pyramid customer segment, which is predominantly women, with the realization that failure to fully harness women's productive potential represents a mixed opportunity to drive accelerated global economic growth. Supporting women's wealth creation and financial independence, First Bank's approach. The economic impact of the pandemic is significant, affecting women the hardest. A recent World Bank's report shows that 2021 will bring an increase in extreme poverty, with a minimum of 71 million people expected to fall below extreme poverty. Women are losing their livelihoods as they are more exposed to hard-hit economic sectors. The United Nations also estimate that at least 47 million more women and girls will fall below poverty line this year, with a minimum of 247 million women in extreme poverty because of COVID-19 pandemic. While responses to financial inequality have been well-intentioned, it remains largely fragmented. It has therefore become imperative to match the scale and urgency of this challenge with financial products that address the life cycle, financial needs of women. The product should holistically address the needs of women by providing them with integrated access to savings, as well as short and long-term credit, capacity building, and wealth management advisory. This suite of products will improve the earning capacity and reduce poverty levels amongst the women folk in the medium to long term. Success will be dependent on everyone playing their own part. Today, women not only own and control greater wealth than ever before, but they are also changing the direction of wealth management and the goals of wealth creation. As a leading financial institution on the continent that inspires and empowers women to take charge of their financial future, her bank, First Bank, provide access to resources and interactive workshops and advisory that help women to make informed financial decisions and build wealth management competencies. Through tailored advice and planning, our FirstGem product and services help you build financial confidence. About FirstGem. In the last 5 years, our FirstGem initiative has served to foster the empowerment of women across the socioeconomic strata, with implementation across 3 pillars: the FirstGem platform for women, value proposition including capacity building, affordable finance, access to infrastructure, market visibility for women, medium and small scale enterprises. And lastly, a strong commitment as a financial institution to support women by leveraging our bank's resources in developing unique and mutually rewarding solutions. Today, Our work is more important and impactful than ever. A review of the performance of the FirstGem initiative shows the effectiveness of our efforts to elevate and empower the Nigerian women. In 2020 alone, we gave out loans of about 58 billion to over 81,000 female entrepreneurs and professionals. Empowering women via our agent banking proposition is one of the outcomes of the FirstGem initiatives. Across our agent banking network, which is the largest verified bank-led agenting banking network in Nigeria, we have about 24,500 female agents, representing about 28% of the agents in our network. And it gives us much joy to see that more women are embracing this proposition and getting empowered. The FirstGem initiative takes an inclusive approach to empowering women to make confident and sound decisions with respect to their businesses, family, and future. Whether you are the primary financial decision maker, a partner, or financially independent, the time is now for you to power your own financial sources by being part of the FirstGem initiative. Open a FirstGem account and join the FirstGem community. Finally, as we close out on the activity that celebrates the women folks this March, I would like to restate that at our bank, First Bank, we remain resolutely committed to providing products and services that will allow our female customers and employees to thrive and attain their maximum potentials in business and in their career. Let us work together to make 2021 count for women everywhere. I thank you all for your attention, and we all look forward to a very productive session today. Thank you.
Thank you very much, Dr. Adishola. That was very lovely, hearing all the good things that First Bank has been doing for so many women across Nigeria. If you're just joining us virtually, especially my virtual family, if you're just joining us, it's not too late. You're still welcome to the party. Share your links with your friends. If they did not register for the webinar, tell them that they can just click the link on YouTube, First Bank Nigeria, and then they can get to watch everything that it is we have. They can get to watch everything it is that we have in store for them today. So please do that now. Be prepared. There's so much that we have in store for you. Some weeks ago, there was a call to action made for the seed fund. Somebody today is going to be going home with 1 million naira to help boost her business. It could be you. So don't miss out on this. We will have some people that were nominated to come in to pitch. We have judges that will be here today that would say, this person pitched well. Let's give her this 1 million naira. And it's from across Nigeria, not just Lagos alone. So I want you to stay tuned. Don't go anywhere. We have so much in store for you. We have a professor that will be talking on the current state of the global economy and how it impacts on business decisions, all the way from Barcelona. His name is Professor Pedro Videla. Professor Videla is a professor in the economics department and the holder of the IESE Banco Sabadell Chair of Emerging Markets. He holds a PhD and an MA in economics, both from the University of Chicago, and a commercial engineering degree in economics from the Universidad Católica de Chile. His areas of specialization include macroeconomics, international economies, and emerging economies. Ladies and gentlemen, a big, big round of applause for Professor Pedro Videla.
epidemic. So we need to go and have a lockdown in order to flatten that curve so we won't have a huge pressure on the health systems of the countries. The issue is that when, for flattening that curve, what happened is that we maximize another curve. We maximize the curve of recession. So we flatten one, but we maximize the other, and the world in 2020 has a recession that we have never seen before in this time. It's an incredible recession. The world GDP, according to the IMF, went down almost 5.6%, which is something that when we had the crisis in 2008, 2009, the world GDP went down just 0.7%. Now we have a substantial decline. Actually, the previous time where we had a decline in the world GDP in this time was in 1938. When we had this recession in 2008, we say, oh, this is a unique event. Well, unfortunately, it was not. We have this substantial decline that affects most of the countries of the world. Here, in the right-hand side, in the red line, the IMF told us that in 2020, roughly 90% of the countries of the world are in recession. 90% of the countries. And this, again, was something that we never expected. Something that is like when we have an insurance company and then all the cars get a maximum, they say, that's the vision of the IMF. I have to help countries, and then all countries go into this recession. So this is the map of 2020 of growth. This is the map how the world grows. And you can see all the countries there that have declined in the year GDP growth. As you can see, China grew 2.3%. Therefore, the IMF said China didn't have a recession. Well, you have to be careful with this because the definition of recession is having 2 quarters of negative growth. But that definition is a textbook definition. What the more relevant definition is how far is the country from the potential growth. And maybe if China can grow at 6.57%, maybe if growing at 2.3%, that gap, that spread between the actual growth and the potential growth is putting China also in a recession growing at 2.3%. So this is something that we have to be very careful. But you can see how awful is the world in 2020. Again, according to the IMF, the loss that we could have with this recession will be roughly $9 trillion. That's what the IMF told us in April 2020. There you can see the projection in January, the adjustment in April, $9 trillion. That is roughly 8% to 9% of the world GDP. But then, in October, the IMF told us that the loss in growth will be up to the end of 2021. Maybe we don't recover this growth, this loss will continue, of $13 trillion. So this is something, a dramatic change in the world economy. For 2021, fortunately, we see a recovery. We see a recovery in all countries. There are a few countries that still will be in a situation of recession, but we see a recovery in all the countries. Some people claim that because of this, we are in the presence of a V shape of recession, where they use letters, or V-shaped recession. Well, all recession is a V shape, because when you go down, you have to go up. So they come up with this V shape of recession, looking at what the growth of this quarter compared to the last quarter. That's not the right way to look at it. The right way to look at the thing is what the growth of this quarter versus the same quarter a year back. That will be and if we look at the V shape, it's kind of shaking the story of the V shape. we are recovering. We are coming out. Most of the country are coming out, and this is you can see the difference in recovery. Here you see how China recovered because it has a hit before the rest, and how the emerging market eventually will recover, will get at the rate of growth higher than the industrialized or developed countries. Nigeria, like all countries, have a substantial decline. You see, in the second quarter of last year, the GDP declined 6%, but you can see the last quarter of last year already was positive. So it is one of the countries that are recovering fastest from this pandemic. When we have a recession, we have to apply policy. That's what most of the people do. When we have a recession, we apply policies. What are the policies that we apply? Well, what we know to do in economics. In economics, we know two types of policies: fiscal and monetary policy. The monetary policy is the central bank printing papers. Give us the paper with few richer, we spend more. The fiscal one is the executive office take money from one segment of the population and give it to other segment of the population. Thanks to the financial market, we can do the executive office can do something incredible. Can take money from the next generation. They can take money from the next generation by issuing bonds. So we can issue 30, 40, 50 years bond that the next generation will pay, and we use it today. Both of these policies have been applied in this recession. And the objective is to try to minimize the curve that we are maximizing the lockdown. That was the aim of this. Monetary policy. Well, huge increase in the monetary policy. Here you see the main countries of the region, and you can see how the interest rate in Eurozone and in Japan, they were already negative when we faced this recession. They were already negative, so they could not increase anymore the interest rate. The United States has more room, and the United States increased interest rate. Well, because of the central bank already were in negative levels or very close to zero, the policy that was followed, it's already known to us. It was not known before the Great Recession of 2008. Quantitative easing, that's the name of the policy. And an orthodox policy that implies that the central bank, given that cannot push the interest rate down, will start buying bonds from the private sector and the public sector. And this is what, at the same way that we did in the financial recession, we did it this time. So let me show you how we did it. Here is the money supply of the United States. This is a trick of economics. This is called monetary base, meaning this is what the central bank prints. Then the banking system, by lending and borrowing, creates more money. But this is what the central bank does. As you can see here, until 2008, the money supply was roughly 800 billion. That was the money supply. Then, 15 September 2008, Lehman's brother, 1 billion. And Mr. Bernanke, that was in charge of the central bank, started buying all the bonds of the banks. This is what was called quantitative easing. Then, in order to save the problems of the real estate sector, he started buying mortgage-backed securities. And this is quantitative easing too. And then, Mr. Obama started having a substantial deficit in the fiscal deficit, and the central bank, the Fed, started buying treasury bills, bonds from the government, and this is quantitative easing 3. And then we thought that by 2019, the recession was already gone. We have to take this money out, and Mrs. Yellen, that at that time was head of the Fed, and today is Treasury Secretary, Mrs. Yellen, started to take money out. But then came the recession, and we start pumping money again. So this is, look at the thing, we started with 800 million, went up for more than 7 trillion. So this is an incredible tsunami of liquidity, money pumping by the Fed. What did the ECB did? Something similar. You can see here, again, in 2007, the money supply the monetary base of the ECB was 1.5 trillion. Today, it's 7 trillion. Here in 2012, Mr. At that time, in the central bank, president flew to London to try to convince the banks to buy bonds of the peripheral of Europe. He was not very effective, and here in 2015, Mr. Draghi started buying bonds, 60 billion, 80 billion per month of private and starting and here's the money supply, here's the money supply of Japan. And you can see the same thing here in 2012 was elected Mr. Abe in 2013, started with a 3-hour pumping money. Again, we started with 1 trillion, went down to 6 trillion. And here's the money supply of China. And you can see the same. Increasing the money supply, buying dollars, trying to give the dollar back to the renminbi. And here is when they decided to let the dollar go, and still, again, start from 1.5 trillion and went up from 5 trillion, 1.5 trillion and went up from 5 trillion. So at the end, all this here, we are at around 6 trillion, with almost 60 trillion of huge investment that we are basic receiving the world. So that's why we see that the interest rate everywhere are 0, and that is a huge, huge impact of this. Just one caveat, one little comment, more technical one. This money didn't go out to the market. Here you see, just to show you the case of the United States, here you see in green what I just showed you, the monetary base, but in blue you see the reserves that the banks has in the central bank. So most of the money that the Fed was printing, the banks told the Fed, we will keep it. And the Fed said, yes, I will keep it. So this is money that's not in circulation, despite that the central bank printed, because the banks send the money back to the central bank. In the fiscal area, something similar happened. Here you see the impact, the fiscal response of the countries to this pandemic. So this is not only the direct fiscal or expenditure or declining taxes, there were not too many declining taxes, but all the loans and equities and warranties to keep the world moving around. So this encapsulation is 40% of GDP, Italy 38% of GDP. See the substantial increase of this creating huge fiscal deficit. The discretionary fiscal stimulus, just the fiscal stimulus, it's here. You see, it's mind-boggling. We have never seen something like this in terms of increasing GDP. All this imply that all these countries are having a substantial increase in government debt. They have the issue. How will we pay this debt? That is a substantial issue. We are in a great recession. We have to do something. That's what we do. The next question that we're looking at is, why don't we see the interest rate going up? If the governments are borrowing and borrowing and borrowing because they are issuing bonds, why don't we see interest rate going up? Well, because now this policy managed with the previous that we just saw. It's the central banks that are buying the bonds. So it's just printing money to buy the bonds that the fiscal deficit is creating. That's how we are. These countries are surviving, and this is a substantial increase that indicates a substantial increase in the money supply. So this is the policy that we apply for the future. What are the worries? No? And here I have a wall of uncertainties. No? The first one is when we will see the light at the end of the tunnel. When will we get that herd immunity vaccination. Here you see, so at the end of the tunnel, especially for countries like Spain, where I'm at now, it's the vaccination is the key to go back to tourism, to restaurants, to bars, to all these activities that are roughly 15% of the Spanish GDP. Everything is closed. The whole economy goes down. But here you see Israel already has more vaccination than the population, 1.1 per 100 person in the population. But here you see the other country. We're still very behind in this process. Although countries are improving, we are extremely behind in this. In 40% of the population in the European Union. United States speeded up. United Kingdom, it's already in 40% of the population, but it's very slow in the European Union. It's not here, but in the case of Germany, in the case of Spain, out of 100, how many people have been vaccinated? Between 2 and 3. That's the number. So it will take a long time to try to go to this immunity, this immunity. And here you see that is what is good, that the fatality rate is declining, and it's been declining and keeping low. Although the cases are increasing, the fatality rate have been declining. But still, we need that vaccination to solve this problem. The second element in this wall of uncertainty, what will be the impact of this monetary tsunami? This is a very relevant question, because maybe people say, why we don't have inflation? Well, maybe we have inflation. Maybe we have inflation not in goods and services, but we have inflation in assets. What asset? For example, government bonds. Let me show you some data on the European Monetary Union. If I want to buy a 30 years government bond in Germany, today the interest rate of that bond is negative. So I have to pay Germany to lend money to Germany. I have to pay Finland to lend money to Finland. I have to pay Netherlands at 30 years to lend money to these countries. Why is this? Because the price of the bond is on the roof. Why the price of the bond on the roof? Because the central bank is buying. It's there. Mr. Draghi bought directly and indirectly through collaterals more than 50% of German bonds. So the price is in it. And you can see countries like Spain, that its debt is growing at a fast rate. Still, if I want to lend money to Spain at 7 years, I have to pay Spain. So this is an incredible bubble that we are seeing in these bonds. And what's the implication of this bubble? That we transfer to other bonds. Here you see that at the end of 2019, beginning of 2020, already we had that roughly 25% of the bonds sold were at negative interest rate, and 50% of them were low, that one interest rate, but it's nominal. In real terms, was negative. So all the bonds, that 50% of the bonds were paying negative real yields, and this is through these incredible policies that the countries are following. Now, we saw before that the banks are not lending all the money, and so the question is, why the banks don't lend the money? Well, the banks don't lend the money because the interest rate is going to zero. If you have zero interest rate, you don't have the spread. The spread indicates the possibility of the banks of making money. They borrow at one rate, they lend to another rate. If the interest rate goes to zero, the spread disappears. So you can see here in Europe, if you take the prices of the banks in the market, meaning capitalization, and then you take the prices of the bank in their accounting, the book price, capitalization, our book price in Europe is 50%. So the banks in the market are worth half of what are worth in their accounting. Why? Because they cannot make, their business has disappeared. Many Spaniard banks, the main ones, although now we have a new one that is bigger, how they have survived? They have survived mostly in emerging markets, in Latin America, most of them. That's the benefit that they had moving to Latin America. And finally, I don't want to go all the stock markets you see here in United States, all the stock market, when we have the increase in the money supply in March to react, all the stock market started to boom. And this happened in emerging market, advanced economy, everywhere you see the booming of the stock markets. No, here you see stock market of the world. You see the months of March. We see the increase in the stock market. So this will imply that the stock market will have a high price given this flow of money. Robert Shiller, who is a Nobel Prize of Economics, always is raising the hand and say, be careful with this, be careful with this. So he calculates a price earning ratio. That's the way how people, finance guys, try to see how expensive are the stock market. So they look at the price of the stock versus what the stock will give you, the earnings. If the price is substantially bigger, what will give you the earnings, that means that this is too expensive, no? So Mr. Schiller calculated the stuff, and as you can see here, in the last 100 years, there are 3 periods where this measurement of price earnings have gone to 30. One, it's a Great Depression of 1930. Second is in .com of the year 2000. Third is today. So we have to be very careful about this. And all this liquidity imply that the price of gold is in the roof. Liquidity imply that the Bitcoin is in the roof, and all the type of things. So this is the second worry that we have in the world. This is very relevant for countries, for emerging markets, because this increase in prices is transferring now to increase in consumer prices. If we have an increase in consumer prices, what will imply that the Fed and other central bank of developed countries will have to react to this increase in consumer prices. How they will react? Increasing the interest rate. What will happen if we have an increase in the interest rate? That money that flew to emerging markets at the increase in the interest rate in the United States will flow back, will fly back to United States. And that will imply capital outflows and depreciation of the local currencies and problems on balance of payment stability. No? The other problem is the debt. As I mentioned before, huge accumulation of debt. Here you can see what is the level of the debt of the country. United States arriving to 150%, the Eurozone to 100%, Japan to 150%, China to 60%. So this is an incredible increase in the debt. And this debt is higher in advanced economies than in emerging markets. In advanced economies, the debt it's at the level that it had in World War II. So it's an incredible increase in the debt. You can just check the case of United States. United States, the debt, it's above 100%. Last year, the fiscal deficit of United States was almost 2 trillion US dollars. So it's larger than the Spanish GDP. And then other countries like that Spain, Italy are also increasing their debt. The question is here, will these countries be able to pay this debt? And big question mark on these two, because that will imply instability around the world. Here you see the total debt of the countries, and you can see that the private and public debt in countries like Japan arrived to 400%. Now this is a very high level of debt. So this is something another worry that we have to have. I have 5 minutes, so let me jump ahead. Another worry is what's going on in China. China it's growing at a rate, as we saw before. It didn't have a recession last year, and this year will go 7.3%. Given the huge fiscal stimulus in United States, the Americans will take this money and will buy goods. Part of the goods that they are going to buy will be import goods. Big chunk of those will be Chinese goods. So people are saying that this 7.3% in 2021 is too low, that maybe China will grow at 9% in 2021, which will be something very, very positive. This is very positive because China, it's having increase in investment as it did in 2014, 2016. By that time, China was demanding a lot of raw materials and commodities. So you can see here 54% of aluminium, 50% of nickel. It has a huge demand for resources. That's what helped us, people from sub-Saharan Africa and South America. During that time, we have this process. China demanded products, and that helped all the countries that export commodities. Something like that might happen this time. So this is a good news for emerging markets, that it will be a positive sign. We see today that the prices of commodities has not dropped as dramatically as the drop in GDP that I saw you before. The main reason of this has been China. So for emerging market, our worry are essentially three. First is the financial, which is what United States will do mostly. Will they increase the interest rate? That's what it's very key to see what's going on with inflation in United States. No, it's a main issue, because if inflation increases, interest rate in United States will go up to react to the thing, and we see the capital outflow, we will see the depreciation of the local currency, we will see maybe balance payment problems. Second issue is China. What's happening in China? We see that China and other emerging markets, and United States, by the way, it's recovering. So we can see that that this will be, the main trade partners will be an important issue in terms of growth. And finally, we have the issue of commodities that is related to other three. So these are the variables. How are these variables until now? This variable until now, the China is growing, commodities are not declining substantially. The big question mark that we have today is what will happen with United States in the financial condition. That's a big question mark that the emerging markets are having. To finish, the other big problem that we are going to see these days is a process of deglobalization, that for some countries will be a positive one, for some other countries will be a negative one. For China will be a negative one, no doubt about. For East European countries will be a positive one. For Mexico will be a positive one, because these are closer to Europe and to United States. You see, trade has been increasing since 1950. Here you see export plus imports over GDP. And as you can see, since the end of the Second World War, trade started to increase. But in 2008, after the crisis, this trade started to go down. And this decline was mostly because of the trade war of Mr. Trump. We were expecting that after Mr. Trump, this will increase. But now the pandemic sent us a clear signal. Maybe it's not good to be that much globalized. Maybe it's better to hedge about this globalization. So what we are going to see in the world, it's likely that we are going to see now some supply chains that will be much shorter than we have seen until now. First, there are emerging markets that are growing fast and will grow fast. Many of them in sub-Saharan Africa. Secondly, is a demographic trend. Today we're 7.5 billion people in this world. The United Nations tell us that by 2100 will be roughly 10 billion people. of this increase from 7.4 to 10 billion, and then we will see a plateau, not further substantial growth, 75% of that growth will be population in sub-Saharan Africa. A huge possibility of growth in that way. That will imply change in this supply chain. Then we will have environmental trend. Now everybody is worried about the CO2 footprint. You cannot bring things for the other side of the world because they have huge CO2 footprint. If the United States join the Paris Agreement and we have a more cohesion world, that will be an important element. Then we have the pandemics. You see people in many places where say, we don't have ventilators, we don't have masks, who has those? Why don't we have different suppliers? That will change. And the final two is international trade policy. We will see more and more regions imposing constraint to capital flow, to flow of goods, trying to develop domestic industry, and technology will make a big change. Many of the activities that now United States or other developed countries can outsource from the emerging market, they will be able to do it through any sort of technological progress, automation, artificial intelligence, whatever, and that will be. So this is the other big change that we see in the world today. Okay, I'll stop here, and so we open to questions. So I already passed my time, so let's stop here.
Thank you very much. Thank you very much, Professor. Thank you very much, Professor Videla. We have a question from Penny. Now, Penny asks, how I would like to ask as to what advice would you give to normal people who want to take advantage of the current economic status and benefit from the current status?
The thing is, this is the economic status. It's very complicated. What we know from this data that I put forward here is that interest rate will have to go up sometime. So this is something that is interest rate will have to go up. So I will I want to get it. I'll try to do this, but I'm too old. They told me no at the bank. I went to the bank and say, look guys, I owe you money. Would you do me a favor? Would you change my variable interest rate to a fixed interest rate? That's what I want. We will charge you a penalty. Don't worry. Tell me the penalty. I want. So they were telling me that they could fix the interest rate on my debt at 2%. That's if I manage to achieve that, that's a gift, because today the interest rate is 0. So people are telling me, Pedro, you're nuts. How at 2%? It's a very good deal, because that will imply that in 3 or 4 years from now, I will have the interest rate will be above of that, and also inflation is already close to 1.5%. So that's it. So this is something that. Secondly, in the long term, entrepreneurial capacity, education, these are key. We are moving to a world where technical and entrepreneurial capacity will be fundamental. This is something that, and this is why it's so important the conference today. Empower women. Women are half the population and the smartest, and half. And this is something that. So this is key for the development to have and technical is important, but also it's important to have a new type of view of the world. It's not bad to fail. Fail is a way to move forward. So this is something that. So I will to have the ability to take project and move forward. I think that's a way in the future in the world will be more and more important.
Very much, Professor. We have another question from Miriam Osiemi. She says, what would you advise small businesses and startups in a developing nation like Nigeria to take advantage of in the global opportunity in the COVID-19 challenges present, please? I'll take that again. What would you advise small businesses and startups in a developing nation like Nigeria take advantage of in the global opportunity the COVID-19 challenges present, please?
New technologies. COVID has speed up a process of changes that we didn't have, that we expected to have, but years ahead. So COVID has been a sort of a stress test in all business. Now, what we are doing today is totally normal. 5 years ago, we have been very difficult to say, will it work? Will we have a connection? Will people be willing to listen somebody? That's something that today it's normal. This has that the COVID has done to speed up and to tell us this is a trust test. Can you take this? Can you move forward fast or not in this line? For example, I've been teacher professor for almost 30 years with the same technology for 30 years. I stand up in front, I have a group of guys in front of me, I tell a story, I have a blackboard. That technology was for the last 100 years. What COVID did, say, hey, that technology you will have to change, my friend. You cannot continue with that. So this is a huge stress test in MBAs, in university, in school, in whatever. So what is a small and medium enterprise in an emerging market will have to do? It's what most of the people in this world will have to do, which is look at the new technologies, try to adopt, try to be in the, and provide goods and services to your customer. But essentially, try to be hedge against the possibility that something like this will happen. And now that people are used to use their IT system, move toward that line. That is it's the key for the future.
Thank you, Professor. To our virtual audience, please note that you can send in your questions. If your questions don't get answered today, you can always visit the First Bank portal. Eventually, our speakers will attend to all of your questions. And if you haven't signed up yet for a FirstGem account, make sure you visit our website and click on the link that says FirstGem, and you can join the FirstGem community. Now, Professor, we still have some more questions here for you. This one is from Nana Daudu. She says, Prof, do you see a bubble in the USA stock market?
Well, it's everybody see it. It's not me. It's everybody see that bubble in the U.S. stock market. As I showed you before, the price-earning ratio has at the level that we have not seen in 100 years, or only in the 2001. So the question is why people keep putting money in that stock market, because nobody wants to go. It's against the Fed. The Fed will keep pumping money, more liquidity to the system, and but it's a risky business because you don't want to be the last holding that piece of paper that maybe tomorrow goes down its price. No, so this is the process. Anyhow, we have seen in the last 2 quarters a sort of adjustment in the stock market in the United States, not the full adjustment, but some adjustment in the stock market, and we are seeing now in the bonds, 30 years bonds, that the yield curve is becoming steeper and steeper and steeper, meaning the interest rate on 30 years is increasing. That is a signal that the market is expecting some sort of inflation in the future. But I would say that the market, by all measurement that we have, it's overvalued today, the American market.
Elisho says, I'm curious to know how the negatively priced bonds can correct themselves. Also, how much debt is too much debt as seen by Japan's debt levels compared to Nigeria's debt levels?
Okay, that it's something. First, we have to different people can take different debt. Different countries can take different debt. United States have had a substantial increase in its debt, and we're happy to keep lending money to United States. Argentina has a debt over GDP of 50%, half of what United States has today, and went bankrupt. Nobody wants to lend more money. Nobody wanted to lend more money to Spain, to Greece, at a much lower debt over GDP. So it depends on the country, the level of debt that the country can have. That's the first thing. Second, while we are in Spain able to increase this year the Spanish debt from 100% to 120%, a substantial increase, because the central bank is buying the debt. The central bank is putting the interest rate very low, so the service of the debt is very low, and therefore the government of Spain do not care about that. This is not the situation in Nigeria. This is not the situation in most emerging markets. The idea that the central bank can buy debt, can do it just in a small margin. When the central banks start buying debt at a higher level in emerging markets, we substitute pesos, rupees, nairas to dollar, eliminating that ability of the central bank. So so the big question is, what will happen in 5 years from now, when the European Central Bank stopped buying the bonds of the periphery of Europe? Well, we will see it there. We don't know what will happen, but some sort of haircuts will have to happen. The most elegant haircuts, meaning decrease on the debt, implicit default. Haircuts are implicit default. The more elegant haircuts can be twofold. First, that we have a level of inflation equal to 8-9%, which is, I'm from Chile, that is peanuts for us Chileans. No, that is the inflation that we have in a weekend. But Europeans, especially in an area where Germany is in, that will be huge. But an inflation of 8-9%, that will decrease the debt in real terms. That will be one way of doing it, because if I owe somebody 100 and there is a 10% inflation, actually at the end of the year I will pay that person 90, not 100, because 100 can buy only 90 in goods and services. That is the decline. And the second one, if in Europe, if we have a mutualization, that's a word that they are, mutualization of the debt, meaning if we have a euro bond and the different countries are able to swap, to exchange their bonds for the European bond. We have a hint in this recession that might happen, because now the center Europe is issuing bonds that is collective, sort of a euro bond, but we don't know if that will happen in the future. But these possibilities are, most developed countries are able to do it. Emerging market, we don't have the possibility of doing that.
Thank you. Another question here is from Kayode Awosile. What is your take on the ongoing Credit Suisse risk debacle? Are we looking at another big bank collapse?
I would prefer not, because of the bank on which I have the share has links with that bank. But I would say bank collapse, it's very difficult that happen meaning it will be some sort of socialization of those debts. The phrase "too big to fail" still is true in the financial sector.
Thank you so much, Prof. Please keep sending in your questions. We might not take all of them, but not to worry. Prof will be able to answer your questions on the First Bank portal. Another one here is from Anthony Uguja. What chances does underdeveloped countries have coming out of this recession with the COVID curve still standing at a steep without any hope of the curve getting flattened?
Well, it's you see when you see the impact of these pandemics has been first China, then Europe, then went to United States, and then some African countries. Not all of it. South Africa suffered deeply with this, but we have to learn much more about this virus. There are many things that don't fit in the typical explanation of a virus. No, we'll see that the impact in many sub-Saharan countries has been very low. In many Latin American countries also has been very low. So what are the learnings? The learnings that to use a middle-age technology to attack this germ has been extremely costly, and we have to study if that is the best way to do it. We have to compare a country like Sweden that didn't have a lockdown with country like UK that have a lockdown, compare a country like Pakistan that didn't have it with India that had it, regions like North Dakota that didn't have it with South Dakota, etc. Uruguay that didn't have it, Argentina that had it. So this we have to learn about this very much. But the recovery will be very unequal, and that's a big problem. One of the big hit of this recession, of these pandemics, is that inequality in the world will keep growing, and will be dramatic increase in inequality across countries. No, people that have high human capital and can work through a computer, or they have many computers and their kids can go to school online, they suffer less. People that need to have a work of service, serving in a cafeteria or working in the street or whatever, they have a much deeper shock. So this shock that applies to countries inside the country apply also to countries. And this is the big problem of this pandemic. Inequality will keep growing at a fast rate.
Okay, thank you. Everyone who has asked questions, hope they've been answered to your satisfaction. Still, if you have some more, always send them in to the FirstGem portal. And now we're taking another question from Oladipupo Omodara. Oladipupo asks or says, it's obvious that majority of emerging economies do not have enough government bonds or debts to enable them make use of debt monetization as a means of recovery like developed nations. Also, hope of increased exports of resources is not immediate. What do you advise as short-term recovery measures for developing countries?
Well, we have the hands tied. This is the big problem, and this is why this recession is so dramatic, so profound. No, we cannot use fiscal policy freely like the developed countries are using. We cannot have pumping of money because that will imply inflation, that will imply devaluation, that will imply capital outflows. This devaluation does not imply that we will get better competitiveness, because this devaluation brings inflation. So although our products become more competitive, the cost of producing our products also goes up because of inflation. So this is a very complicated situation. So what's the first thing that we have to do? Have clear and transparent political and institutions, so we can get part of the huge tsunami of liquidity of the North flying into our countries. Why anybody will want to invest in a bond in Germany that pays zero when there are so many business opportunities in Nigeria, there are so many business opportunities in emerging markets. Why I was willing to buy a bond at zero interest rate or lower? Well, the answer to that is because of risk. Because adjusted by risk, it's not a bad alternative. So emerging market has to decrease that risk, and that implies to improve governance. That is a big step forward. Improve governance to decrease that risk, in order to convince the guys that are buying bonds at negative rate, hey, come here, we can offer you better deals at a low risk. That is something that has to be done. And this is a long-term situation. So I didn't answer your question because you asked in the short run. That is, in the short run, we are in tough conditions. The only hopes again are commodities, China, and law, and that United States doesn't increase the interest rate fast.
Thank you. Anonymous says, Professor Pedro Videlo, I thoroughly enjoyed your presentation. Could you please explain the distinction between V-shaped and a U-shaped recession?
Well, the V-shape are the one that they say we go down and we recover immediately. The U-shape is that we go down, but we stay down for some time, and then we recover. That's a huge shape, no? Some people say that, well, given that we can have a second wave of the virus, maybe we don't have a V shape, we don't have a U shape, we have a W. We go down, we go up, comes the second wave, we go down again, and then we go up. So these are people playing with letters, no? So this is the time that we recover. I think that the best letter, if you want to play with letter shapes, no, is the K. Because as I said before, some people will go up, some countries will go up very fast, other one will stay behind. So these are the two arms of the K. And this applies to all at all levels. You have human capital, you have skills, you can understand technology, you have access to the technology, you will recover. You have human capital, you have low skill, you cannot have access to technology, you won't recover fast. You are a country like Spain, where big chunk of your GDP, it's closeness. It's are going to bars, are going to restaurants, it's going to see Sagrada Familia in Barcelona, people, agglomeration. Your country will have to have a huge shock. That's the lower part, no? That's it, because that's how you survive. You're a country that devote your activity to manufacturing or to some sort of commodities, you can recover. That's the assets. Interest rate goes down. Which asset will recover faster? Will grow more, the stock market or the housing? Well, we are moving to a future that is heavily uncertain. When the future is heavily uncertain, you want to walk into this future with a lot of liquidity. You don't want to walk into the future with a house that you cannot sell, so or with a bond at 30 years. So there you see the stock market will have a substantial bigger hit because of this liquidity, and that's how what we said before. It's very, very up the stock market, or gold, or Bitcoin, or whatever is a reserve of value that is highly liquid. So these are the difference. So the K at all level, it's a better letter to explain what's happening.
So much, Professor. Another question here from Bola Gbade Adeleke. Why is the pandemic not affecting cryptocurrency, especially Bitcoin? It keeps going higher and higher.
Because it's another cryptocurrencies especially Bitcoin, are not currencies to exchange. To exchange with Bitcoin, it's highly costly because the proof of value, which imply that in the transaction I have to solve some sort of math, complicated math, in order to do the proof of value. When you have more and more and more transaction, you cannot scale that. So the Bitcoin is not a means of change. The Bitcoin is a reserve of value. It's like gold. It's just like gold. And because we have a huge liquidity, people don't know what to do with their liquidity. They don't know where to put it. I buy bonds, they are negative. I buy stock market, they are overvalued. Gold, it's a huge. Bitcoin, it's very, very way up. So people are finding ways where to put their liquidity. And that's what's happening. We don't have enough asset these days to keep the huge liquidity that the world has. Therefore, cryptocurrencies are booming.
Okay, thank you very much, Professor Pedro. Thank you so much for joining us at the FirstGem annual conference today.
Thanks for the invitation. Okay. Really enjoy. Thank you very much.
Prof, don't leave. This is Ibukun. I just want to say thank you so much. I'm so grateful that you agreed to share with us. For the benefit of everyone, Professor Videla was my teacher at school, at business school. And he's
Can
my
we give him a
friend,
round of applause,
and
please?
I'm really glad you came. Thank you. Thank you. For those who thought this was a bit heavy for them, the reason why we decided to include a global economic session, and I knew that Professor Videla was the right person to do this for us, is because no matter what is happening in Nigeria in terms of your business, if you do not understand what is going on in the rest of the world, you miss it. You have a blind spot. You're unable to understand why certain policies by government or certain actions by financial institutions, why they would make those decisions. But you're also not able to be proactive and to think ahead. And women in particular tend not to be interested in those things. And what we're trying to do is make you understand the things that are critical for you to know so that you can make the most of your entrepreneurial adventure and make the right decisions with your money. So, listen to part. Cash will be king going into the future. It's telling you, I know we're going to get into the art of negotiation, but Professor Videla already told you about the fact that you'll be key to try to negotiate your interest rates and hold a position because of trends and changes that will happen going into the future. So we can't just act when things happen. It is key we understand the trends, that we can take decisions ahead of international situations, and every international situation ultimately impacts Nigerian situation. And the way we have set the program, we are going to have someone who will take you into the Nigeria situation. So I know a lot of people were saying, no, we need him to bring it home. No, we are going to bring it home. But we wanted to start from the outside and come back in. So you have a global view, and then we'll have a gentleman who is speaking to you from Augusto and Co., who will explain to you the Nigerian situation, the policies of government, the budget for this year, and how all of those things tie into the kind of decisions that you should be making concerning your business. So everything will be linked. And then when you get into the art of negotiation, is for you to understand how to negotiate yourself in those situations to get the best deal that's in the interest of your business or of yourself. Thank you very much, Mr. Videla, and we're really glad that you came.
Thank you so much, Professor. That was the Chairman, Board of Directors, First Bank of Nigeria Limited, Mrs. Ibukun Awosika. Can we give her a big round of applause, please? She's here present with us, and she's going to be with us throughout this session. Okay, thank you again, Professor Videla. If we have more questions for Professor, all what we have to do is to go to the FirstGem portal and send your questions there, or any questions that you've sent via the Zoom link. Don't worry, we're going to collate everything and your answers will be put up on the FirstGem portal. And we still have so much more to come. We still have the Art of Negotiation by Professor Kandap Mehta. We also have Fumi Oyetunji that is going to talk to us on what investors want to see. Because I know so many people out there are always wondering, okay, if I'm supposed to make a pitch, what exactly am I going to pitch to my investors? What are we to show them? She's going to enlighten us more on all of that. We also have people that sent in entries for the seed fund. Yes, winners are going to be picked today. 3 winners would be picked today. And the first prize will get 500,000 naira, second prize 350,000 naira, and the third prize 150,000 naira. We don't know who the winners are going to be yet, but if you did send in your videos, ensure that you're still logged in. Share the link to your family and friends. If they did not register, they can also watch live on YouTube. If you want to be part of the FirstGem community, all you have to do is visit the FirstGem portal and click and fill out the forms, and you're part of the community. Up next, speaking from the Nigerian angle about the current state of the Nigerian economy and how it impacts business decisions, is Mr. Jimmy Ogbogbine. He is the head of Augusto Consulting Limited, a wholly owned subsidiary of Augusto & Co., Nigeria's leading rating and research company. Can we give Mr. Jimmy Ogbogbine a big round of applause, please? Virtual audience at home, we can hear your applause all the way from home as well. Make sure you're comfortable. Make sure you have your drinks beside you, just in case you're parched, so that you don't miss anything that's going on here at the webinar. So a round of applause again for Mr. Jimmy Ogbogbine. He's coming up to talk about the current state of the Nigerian economy and how it impacts on business decisions. Thank you very much.
Good morning, Madam Chairman. Good morning, everyone. Online and real time. Good morning, everybody. Basically, what I'll be speaking about, and the Prof and Madam Chairman have actually made a very good point about what goes on globally affects Nigeria. We are not an island, and even if we're an island, what goes on that island would affect Nigeria. Even when the North Koreans tell you that they're insulated from the rest of the world, it's not entirely true. They are not. They trade through China, and they get their things from China, who help them route it out to the rest of the world, and then they also get things through China from the rest of the world. So over the next 30 minutes, I'll be speaking to you on the Nigerian macroeconomy, showing you some of the, and this is assuming that we understand very well the macro implications that the professor has outlined. So we'll be showing you the Nigerian story. How has the Nigerian story played out? How is it playing out? What are the implications for the economy as a result of all of these macro indicators? And then, very importantly, what is the implication for you as an individual, for you as a household, for you as a business, and for all of you combined, if I permit me to use that phrase? So how does the Nigerian economy and what's playing out in the Nigerian economy, how do these trends affect you? How do the risks affect you? And how can you position yourself to emerge a winner in a particularly very scary period? Okay? Okay, so we'll be talking about the Nigerian macroeconomic environment. We'll be looking at the external sector. We'll define what that means. We'll look at the finances of the federal government. And we'll also look at the business implications of COVID-19 and how we can build change into our DNAs, our business DNAs, our individual DNAs, basically. I got this slide quite late last night, or quite late last night. Okay? So I didn't intend to have this, but when I got it last night, I said, okay, it looks very interesting. This time last year, some of us didn't know whether to go see a doctor or go see a psychologist, or go see a psychiatrist, or go see all of them. Not just because of COVID, but because of the mental siege COVID had created. Particularly for someone like me, what was creating that mental siege wasn't COVID in itself, was the laid-back attitude of society and how people just didn't worry, and how people were still debating whether we should lock down or we shouldn't lock down, and people still trying to hug you, people still trying to shake you. And at that time, I'll be wondering, like, don't you know what's going on? Why are you trying to shake me? Okay? And I remember very well coming once to the island for a meeting, and meeting people whom I had assumed that, okay, you live in the parts of Lagos that the numbers are quite scary, and you're trying to shake me. I really don't know what's going on. Why are you trying to shake me? But how time flies. 139 cases this time last year, 162,000 cases today. But look at the beauty of time. We were under so much emotional and mental siege when we had only 139 cases. But we're all better off today mentally, not entirely healed, but we're better off mentally today when we have 162,000 cases. Okay, so it just shows you how, with the passage of time, things do happen. We're managing it better. The good Lord has also helped us, whatever we've done right or wrong. He has helped us and we've managed it, and the results are better. It actually feels a bit un-Nigerian, feeling safer in Nigeria today than in the UK. I mean, I never imagined in my life that a time would come when I'll feel safer here in Nigeria than in some of the rich Western nations. And vaccine rollout, the initial call was that Nigeria would not be getting the vaccine until 2022, fourth quarter, or even 2023. But interestingly, vaccines have started. A few of us here in this hall may have even been vaccinated. Even some of the fake news apostles and prophets have started getting the vaccines as well. Also good news for us. It shows that between all of the causes that research has detected on why our COVID case for a country of 200 million people hasn't been so bad, and the vaccine, then I think we'll begin to see less of the COVID effect on the economy. However, as we'll get to see in the later part of the presentation, some trends will remain with us. We're going to remake our lifestyles, or we are remaking our lifestyles without even realizing. A lot of things that have been picked up as a result of COVID will never be going back to the old ways. We'll be sticking with the new ways. So it's still important that while we are getting over the effect of the health issue itself, some of the effects of that health issue, or some of the effects of the health issue, would remain with us. Okay. Now, what are the effects of some of the effects of COVID that we did see? For the first time in my lifetime, and I may not be too old, I never imagined a commodity like crude oil whereby the seller would pay the buyer. Get that right. The seller is paying the buyer to take crude off him or off the organization. I'm selling my phone to you, and I'm saying, you give me money for taking my phone. I mean, there's a dustbin. I could throw it away instead of paying you to take it off me. So, but we did see that as a result of COVID. It remade the oil markets entirely. Have we gotten out? Let's have the slides. Let's look at the numbers. No, go back to the prior slide. Are we out of it entirely? No. 2 weeks ago, a newspaper called me and said, Jimmy, oil prices are going to $70. What should Nigerian government be doing with the savings and all of that? I said, relax. Let's not make a wrong call. There are no savings. We're not going to get a savings because oil rose to $70 for 2-3 days. That's not how the oil markets work. How do the oil markets work? How do we like to look at the oil markets at Augusto? First, we look at averages. It's not today's price. It's not a spot price. We look at averages. How much are you going to earn over a period? So the fact that prices go to $71 2 weeks ago doesn't mean that hurrah, we're all over. No. What would be the price average over a quarter? First over a month, over a quarter, then over the course of the year. Okay? UK is just gradually coming out of the lockdown. What does that imply for demand? If people aren't going out, right? Offices are locked down. fewer trains are moving, what does that imply for energy consumption? It implies that energy consumption will be what? Low. Okay? Energy consumption will be low. So, I speak to friends in the US and I ask them, have you resumed at work? They say, we're at work but work from home. So they aren't burning energy as much as they used to. So in terms of looking at the better part of 2021, what this implies is that energy consumption on the average is still low. How many people are excited about summer holidays? Fewer than, say, 3 years ago. Which means that if you ask people who are flying down, are the planes full? They will tell you not entirely. So aviation fuel consumption is still what? Low. So there may be trends or spikes that could cause oil to go higher today or tomorrow. The Yemenis could bomb an installation in Saudi Arabia and oil prices tick up. Okay? But on the long term, especially for this year, right? Prices are we're still not so excited about prices. Now, the second factor we also have to consider in the oil markets is this. What OPEC is currently doing is curbing supply to stimulate pricing, because the oil markets are a function of demand and supply. So when demand is low, ordinarily prices should drop. But what OPEC has learned to do is, OPEC along with the non-OPEC countries, the likes of Russia and Brazil, they formed this loose alliance called OPEC Plus rather. They formed this loose alliance called OPEC Plus. And at every point in time, what they are doing is, let's take out supply from the market. So that however demand may drop, supply also drops with it to create that buffer for us to increase pricing. All right? Now, so for Nigeria, remember that revenue is a function of price times quantity. You look at the price of oil today, and then you look at the quantity of oil Nigeria is exporting to arrive at Nigeria's oil revenues. So even when prices rally for whatever reasons, like I said, Yemen attacking Saudi Arabia, prices rally, Nigeria's oil demand is, our oil supply is what? Low, because OPEC has cut our supplies because they want prices to rally. So they've gone to every single OPEC country, taking off the quota. So we, for instance, 1.8, 1.9 million barrels, 2 million barrels, that's what is like a dream world for us, right? 3 million barrels is too good a dream for us to even imagine at night. So let's stick at 1.8 to 2 million barrels, okay? And now we're down to what? Around 1.5 million barrels. So irrespective of a rally in prices, the cut in supply means that we're not where we want to be in terms of oil revenues. So when you see oil prices rally a bit, don't get excited. Don't think you will call your BDC and you're going to get dollars at 360. No. Okay? Because it's a function of price and quantity. And the quantity right now means that we're cutting quantity as a result of OPEC quota. But let's look at the numbers to see what it will come to. Let's speak more with numbers now. So eventually, we're saying that in 2021, oil and gas export revenues will be around $35 billion, 25 at a worst case, and $35 billion, depending on prices at any point in time. What this means is that Nigeria has entered a period of low oil and gas export revenues. And let me tell us what this means. At about 2014, we're doing close to $90 billion in oil revenues. So let's even go for the best case scenario this year, $35 billion. We're doing more than double of that. That's one way to look at it. Another way to look at it is this. Our diaspora remittances annually, best times, roughly around $25 billion. Okay? So what this means is that we may be earning, if we play at the lower end of the curve for our oil and gas exports, we may be earning the equivalent of from oil and gas as we do earn from diaspora remittances. When you see the naira being troubled, especially against major currencies like the dollar, this is the reason why. There's nothing but this. So it's a function of you've got lower oil and gas exports, which means that as a country, you have less dollars to defend the naira. Your oil and gas inflows are lower for you to get the kinds of currency exchanges that you want. Okay? We'll talk about what we can do as an economy as well to fix that. Part of the things is that we have to take the hard reality of the situation. When your oil and gas exports are low, and your exports generally are lower, then you should not imagine that your naira will exchange at a higher value to your dollar, to the dollar. Okay? We have to accept some home realities that this is the reality of the situation. So, secondly, we do not think foreign investment. We think foreign investment to be negative in 2021 due to the current exchange rate strategy. This would also lead to continuous pressure on the naira, and then businesses will continue to be short of FX in 2021. So it's one of the key risks that if you're a delegate here on FirstGem, it's one of the key risks you need to understand going into playing in 2021, that we will continue to suffer these shortages because the fundamentals do not support, a strong rally of the naira against the dollar. Okay? So three takeaways we must leave here with. First, we're going to suffer a period of low oil and gas export revenues. Secondly, diaspora remittances will be all the more important for us this year. And you can see the central bank coming in with some very innovative policies. As a bank, we need to say to ourselves, how do we key into this? You can see the central bank. The central bank knows that diaspora remittances will be as important as oil and gas remittances this year. Because like I said, at the lower end of the forecast, we may be equaling diaspora remittances for oil and gas, 25 billion apiece. And then thirdly, the result of these two effects is that businesses will continue to suffer shortage of FX in 2021. Next slide. Okay, having said that though, there's still, Nigeria, we're never short of good news, however gloomy situations may be. So there's still some glimmer of hope. And what's the glimmer of hope here? As a country, we're not in the kinds of FTY troubles that we just had a global macro class. So permit me to step in a bit into the global macro field. We're not having the kind of troubles that the likes of Argentina did have some decades ago when they had to nationalize foreign currency assets in the country and all of that. And there was shortage of foreign currency. For now, our FCY debt is fully covered by our current account receipts. Okay? So, as a country, we may not have enough dollars to give each and every one of us in this room for our luxuries, either children's education abroad or our travels and all of that. But as a country, we can pay our foreign currency debts comfortably. So we do not have those kinds of alarm bells ringing on us. These are the numbers to show for it. So, here, for instance, our foreign currency debt was only roughly around half, 56% of our current account receipts. For Kenya, of 2019, 189. For Ghana, it was around 77%. Okay? So, which means that in foreign currency terms, Nigeria is not over-leveraged. Okay? As a country, we are not over-leveraged, which means that ordinarily, at this point in time, as a country, we could have been able to comfortably lend FCY to do two things. One, to help shore up our foreign currency position. And two, to help stabilize the currency market. However, like we'll say in my hometown, there's nothing free, even in Freetown. Okay? So, when you then approach the foreign currency lenders, you would have to part with some form of conditions. If you were to go to the foreign currency market, Eurobond, they won't give you conditions, but they will price perceived and imagined and real risks into your pricing. In other words, we'll be collecting these foreign currency bonds at a higher than usual price because of two factors again. First, we're in global macro risk all over the world. This is not about Nigeria. All over the world, COVID has created, special and unseen macro risks. Then two, Nigeria has also created its own Nigerian macro risk with its own hands. All right? So, as a result, foreign currency lenders in the Eurobond market would demand a higher premium to lend you money. Secondly, we could go to multilateral lenders, the IMF, the World Bank, and all of these other kinds of agencies. They would charge lower. However, they would demand reforms that we do not want to hear about. Not necessarily tough reforms, but reforms we just do not want to hear about. What are some of these kinds of reforms they would demand from us? One, and probably the only one, unification of multiple exchange rates. Unification of multiple exchange rates. Okay? So you've got, sometimes we like to, I like to track the market, not with the name of the market, but with the rate of the market. So I'll say to some people, oh, the 390 market, the 480 market, and I'm sure you know which of these markets that already. So that's how I track the market. I'll say the 480 market, the 390 market, and any other market in between. Okay? So the multilaterals will demand a unification. We do not want a unification, not because of economic reasons, but because of political reasons. Then it throws risks to businesses. We have to manage these risks. As businesses, we're not political activists, so it's not our battle to fight it. We just have to learn to manage it. Whether we like it or we hate it, we have to learn to manage these risks. Okay? Next slide, please. Now, so that's it on the foreign exchange market. Let's then go into the finances of the central government. We would also tell you how this affects you. So, yes, we've seen the budget of the government. They want to spend X trillion and they want to earn X trillion, Y trillion. But we do what we call analyst adjustments on this, on these. So the first we've done is we've said to ourselves that, look, we think the federal government can only spend about roughly around 10 trillion in 2021, earning roughly around 3.5 trillion, which means that we're looking at a deficit. So when you look at your revenue and you look at your spending, if your spending is greater than your revenue, then you end up with a deficit. We've run a chronic deficit for over a decade today, right? So it's Nigerians barely know what a budget surplus is. But for academic purposes, it's the reverse, which means that your revenue is greater than your spending. In our lifetimes, by God's grace, we'll see a surplus again. But for now, this is what the Lord has blessed us with. So let's deal with it. So you're looking at 6.5 trillion in deficits, which means that the government needs to borrow 6.5 trillion to fund the budget. Two things happen when the Nigerian government needs to borrow so much. One, ordinarily, interest rates should go higher because they're borrowing more. And remember, we spoke a bit about the laws of demand and supply. So because they're borrowing more, interest rates should go higher. But interest rates are low now. We'll talk about that. And then secondly, CAPEX would suffer because they'll find out that they can't borrow this much. And then some things are sacrosanct. Have you ever heard of federal government workers being owed salaries? Not necessarily, right? Except maybe there are some functional issues or structural issues, but not because of operational issues, rather. Not because government doesn't have money, because government will borrow to pay. Okay? And then when government borrows to pay, meet its overhead, salaries, and all of that, it then defaults, or let me not default, let me not use that word, slows down on CAPEX, which is why you see that the most aggressively built CAPEX in Nigeria today, infrastructure projects, are Chinese funded. You can argue all you want about why we're going to China. This is why we're going to China. It's the numbers that have sent us to China. Okay? 6.5 trillion in deficit. If you want infrastructure, then we have no choice today but to go to China. If we do not want to go to China, then we sit in a country without infrastructure. Finish. So we have to pick our portions between these two. Okay? Next slide. So this is looking at the Fgn expenses. Just to throw up a number here, remember we showed you revenue of about 3.5 trillion, all right? There's what we call obligatory spending in Augusto. And what's obligatory spending? It's interest payment by the government, interest on debt it has already incurred. Two is transfers. Transfers are the allocations to agencies like the National Assembly, National Human Rights Commission, Judiciary. These agencies are supposed to be independent of the executive, so you make transfers to them. And then the third is payroll and pensions. The number there is 7.2 trillion. Remember, revenue was worth 3.5 trillion. So in other words, on obligatory spending alone, the Nigerian government is already in a deficit. We've not even talked about CAPEX of about 2 trillion. So to manage payroll, for transfers, and to pay interest on debt, we have to borrow. And borrow nearly double of what we've already earned in revenues. So you see, all of the CAPEX, of course, is then funded by what? Borrowings. Next slide, please. And then you can see that the inflation numbers these days, they're looking like what the Ghanaian inflation number used to look like a few years ago. So you can say Nigeria has Ghana inflation, all right? So, and it's quite high. And what does this imply? It implies that, I mean, when I was reading about the FirstGem product, I saw single digits. And I was like, how gracious. Like, you should actually be part of First Bank CSR. Frankly, you should be part of your CSR. Because inflation at 14, inflation going 16, 17, our forecast is 14, around 15% for the year. At some point, we think it should come down. But let's even assume at 15%, right? And you have a product that can give you loans at single digit. It means that the bank is taking a loss giving you that money. All right? So it should nearly qualify as a bank CSR. Would the authorities take this? No. But its grammar will just blow here, but not for the bigger picture. But that's what we should realize it is. In our mindset, we should realize that we're actually, this is a CSR to the Nigerian economy, where we're giving out a single-digit loan at a time that rates are in double digits. Okay? Next slide, please. So, but what has happened is this, is that at the same time, the federal government's borrowing is in single digits. Even though rates have started trending upwards again. 1-year treasury bill rates are upwards of 7% today. But imagine inflation at 17%, 1-year treasury bills at 7%, which means that if I buy treasury bills today, I'm losing 10%. It's called real interest rates. I've lost borrowing, lending the federal government money. All right? So what are the good corporates doing? The corporates who have taken care of their books, the corporates who have got investment grade ratings. And that's why you see that the debt issuance in the Nigerian market is rallying. It has crossed a ₦1 trillion mark. Okay? It has crossed a ₦1 trillion mark. So as a business on the FirstGem conference, I'll be saying to myself, how do I improve my bankability, right? At this point in time, that when ordinarily interest rates should be much higher than they should because of high risks, because there's so much money looking for investable outlets. Remember, the Prof said so as well in his own speech, that there's so much money looking for where to sleep overnight. Where do I invest money? Is why the assets, is why the stock market rally, is why gold is rallying, is why Bitcoin is rallying, because money is chasing outlets, investable outlets. So this is a time as a business, I will speak about that in the second half, to say, how do I improve my bankability to even look good, to attract this good money that is looking for where to invest. Next slide. Okay, and then GDP growth rate in 2021. We think that we should be able to do 2% growth rate. Okay? But that 2% growth rate, it will come with a bit of tears and hard knuckles, because unemployment is pushing us into geopolitical risks that we didn't imagine. Okay? Bill Clinton once said, I fought unemployment with jobs. Okay? And what is at the heart of all of the political, socio-economic crisis we are seeing today is not religion. The moment I hear someone starts playing up the religious card for all of the socio-political crisis we're seeing, kidnappings and all of that, I say, there goes an ignorant man. That one is ignorant. Stay far from him. It is economic. When a man wakes up or a woman wakes up, day in, day out, nowhere to go, nothing to do, it's so easy becoming a fisher of trouble for such a person. Okay? Next slide. So, bringing it home now, what then do we think? How then do we think this will play out for the macroeconomy? First, there's an inertia towards macroeconomic reforms. What we need to do is to carry out reforms. Now, let me give you an example. I was quite excited about the new pricing of fuel strategy by the government. But I'll share this with you. You know, there's a difference between deregulation and price reforms. What Nigeria has done is that we've tweaked to the pricing templates. You can call it a price reform for the sake of using that word reform. Have we deregulated? No. And the government tested us last month, 220 something, 220. And when WhatsApp blew up, Government said they're already shouting on WhatsApp. Oh, let's not get them on the street. Just return the price to what it was. That returning the price to what it was, you know what that was? The return of what? The S word. The S word we all hate to use. Subsidy. Another trillion. So if we even run it, right, we could be looking at another 800 billion, which we didn't even factor into that 6.5 trillion deficit we showed you. All right? Which means that we could even be cutting further down on internally funded capex if we go ahead with subsidizing petrol all over again in 2021. Okay? We need to deregulate once and for all. Would it bring short-term pain? Yes, it would. But hey, those whom we think it will bring short-term pain to the most, they mainly use diesel-powered vehicles. Have you seen a BRT bus using petrol? No. So the subsidy actually goes to the rich, not to the poor. So when the poor join the rich in fighting against this subsidy, it's just one of the several injustices of the rich against the poor in this country. That is money for education, money for healthcare. Over $1 trillion annually that could have gone into education and healthcare being used to power the jeeps and the heavy fuel consumption vehicles of the rich, not the poor. Another $1 trillion that could have gone into rail lines and all of those kinds of projects. Okay? And then, so we're going to face a very weak post-recession recovery. Let me define the word recession for us. What's recession? Recession is not when times are hard. It's not when things are difficult. Recession is 2 consecutive quarters of an economic contraction. A contraction in GDP, 2 consecutive quarters. So if at the end of March there's a contraction, you're not into a recession yet as a country. If at the end of June there's small growth, you're not. But there's another contraction, you're not in a recession. There has to be a contraction in December. So it's 2 consecutive quarters of a contraction. That's what leads you into a recession, okay? However, we're going to face very weak post-recession recovery. GDP growth of 2%, population growth of 2.5%, roughly around 3%, which means that the population growth of this country outstrips the GDP growth of this country. And that's why GDP per capita is what? Shrinking. So as a business, please note that your consumers are poorer than they were. Your consumers this year will end up being poorer than they were last year, end up being poorer than they were 2 years ago, and we'll show you the effects. Let's go straight into the effects. And then, of course, one key takeaway here again, that we need 2 key takeaways that we need to leave here with. We would face FX crisis again this year. In fact, we're currently in one. But because the Nigerian people are inured to tough times, we just, remember when we passed through this period in 2016, it seemed as if this country was going to fall into the Atlantic Ocean. But it has even persisted beyond the 2016 era. It's grown longer than it was then. And we're living into it day in, day out. Okay? And then 2, higher unemployment. NSAS was a function of higher unemployment, which breeds anger in the people. We're going to face more of those kinds of crises. You know, I don't know. I hope we don't. But we're more vulnerable. Let me put it that way as someone of faith. We're more vulnerable to those kinds of like we were. Okay? But having spoken with faith, let me speak in substance now. You need to get your businesses insured. All right? So don't follow faith alone. Okay? You need to get your businesses insured. Because this time around, you could just send your trailer to Lagos to Ibadan. Go and help me deliver XYZ goods. And they just tell you, oh, it was an arson attack on the trailer. All right? So you need to get all the insurance that hedge you against all of these kinds of risks. Please get them and read your insurance fine prints. Don't just go to town saying I have an insurance, and when it happens, you didn't have an insurance for that scenario. Okay? Now let's go to how we can build change into our business DNA. I want to imagine that as businesses on FirstGem, we did see different kinds of changes last year. And I'll tell 2 stories to demonstrate these kinds of changes. So, during the lockdown, my wife tells me that the fish woman is contacting her via phone and making offerings. And when I say the fisherman, I'm not saying the fisherman in the supermarket with AC. No, the typical fisherman that, hawks. They're all on WhatsApp, sending their consumers their products. I have this, I have that, I have catfish, that's the only name I know, tilapia and all of that, okay? This price, and negotiations are going on WhatsApp. The typical fish woman. And you first wonder, does she use WhatsApp? Well, it's her son helping her operate it, but her business is using WhatsApp. Whoever is using it in the business, whether her son or herself. Finally, the son is not playing games and running down batteries. He's using the phone for purpose. Okay? Now, secondly, we conducted a survey last year on diaspora remittances at Augusto. And then we had some focus group discussions with some of our young Nigerians in the diaspora. And some very interesting insights that was outside of the core issue came up. They said two things. Remember the Black Lives Matter movement? All of the riots we saw in the US. Do you know it did have a positive trend on businesses in Nigeria? And I'll tell you how. They said, Jimmy, there's a black consciousness in the Western world, in the Western hemisphere. We want to patronize our own. We want to patronize our own because we realize that it's an economic game going on. All right? It's not white versus black. It's poor versus, it's haves versus have-nots. So we need to empower the blacks economically by patronizing them so that we can increase our voices. Why is China having a louder voice in the world today? Is it because, exactly, man, they have money. It's not because they have a large population. India has a larger population, and Nigeria will soon meet them, okay? So it's not just about the number of children you've given birth to as a nation. It's about how wealthy these kids are. So they said, we want to trust Nigerians. We always come back home. So if everybody's empowering Black Americans, African Americans, we come back home. We bring in the local variants. So, Jimmy, we are buying more from Nigeria. I said, buying what? We said, we're buying anything and everything. Buying clothes, buying anybody who goes to Instagram to put up anything. I said, tell me more. He said, Jimmy, it's cheaper for us. I'm in UK. I'll spend £1, which is 650 to 700. But here in Nigeria, I'll buy that same thing for 300 or 400. I said, wow. I said, how does it get across to you? They said, the Instagram people know how to get it across. Do you pay in Naira or do you pay in pounds? They said, Jimmy, come on now. We pay in Naira. So in other words, some form of export is going on. We may not define it as export because we're earning Naira, but I'll explain how it helps you as a business on FirstGem. Some form of export is going on. So social media has become a more effective tool of commerce. And not just social media like the marketplaces we typically know, but even the social media where we're supposed to be throwing up our vain pictures and all of that. There's more to it than just the vanity of the world. Okay? So, the young Nigerians in UK who miss home so much. You'll be shocked how people can miss a country like Nigeria. Right? They do miss home. And one of the ways of connecting with this home that they so miss a lot is by what? Is by patronizing commerce in that country. Okay? So let's go back. Remember that e-commerce, the lockdown, COVID drove e-commerce consciousness all over the world. Even in places where we thought that they had developed e-commerce markets. I mean, look at the rally in Amazon. So we found out that everybody was just scratching the surface of his market. All right? So let's look at the effects of some of these on Nigerians now. So look at the first number. So I tell you one thing now. Total value of e-payment transactions in Nigeria is now larger than our GDP. However bad the news may be from this country, recession, deficit, and all of that, e-payment transactions in this country, even without the telcos going full hog into it yet, is now larger than the GDP of this country. So as a business, if you do not have e-payment play, you're missing out on a major growth area in the country. And these are the numbers to support it. By 2022-2023, it could grow as high as 2 times GDP, nearing the 250 trillion naira mark. Okay? Next slide. So while consumers are worse off financially, what we've also seen is that we've seen increased cautionary approach to spending. Even people who are not worse off financially, people are more cautious in spending. People, oh, lovely, we're here to learn negotiations, right? And people have become more brutal in negotiations today. Don't you know there's COVID? So between COVID and FX, I have 2 negotiation bits. All right? And then we're saying that overall consumer confidence will be weaker because the average Nigerian consumer is poorer. And when consumer confidence is weaker, what do people do? They bargain hunting. So this wasn't even prepared because of the topic of this class, but is what we are seeing in the macro space. That bargain hunting is increasing. People are deferring what people are, prioritizing on what we call priority spending and deferring on luxury spending, holidays and all those other kinds of luxury items. So if you're in a business looking at the focus on the luxury space, you need to change your game. I won't say business, but you need to change your game. You need to rethink your strategy. All right? Okay, next slide. And then there's increasing acceptance of online and e-commerce solutions by customers. Assume I'm a gentleman, right? This gentleman you are seeing never used to do online banking till the lockdown. So assume I'm a gentleman for the sake of this conversation. All right? Till the lockdown, that's when I downloaded my banking app and started using it actively. And I only had to get back into a banking hall because of my 75-year-old, whom I greatly love. Without that love, I would never go back into a hall for her sake. Okay? So what this has done is that post-COVID, more consumers are going to remain with these online habits. They are not going to jettison the ways. I'm not going to strip my phone of all the banking apps and e-commerce apps I've adopted as a result of the lockdown, okay? So as a business, how are you attuned to that? What's your online play? Is it strong enough to help you play? Next slide. And then we're also going to see change in consumer spending patterns. What do we mean here? Here, remember I said something, the consumer is poorer. But it doesn't mean the consumer won't spend. He will spend, but he's poorer. So what that means is that consumer who is now poorer is going to determine and demand for items in smaller packs. Whether you're an or you are a bank, whatever you are, people are going to demand for items in smaller packs. In other words, you would see more 1,000 naira withdrawals at the ATM for banks than even people who will be demanding 500 naira withdrawals. Sometimes when you see a very long queue on at the bank ATM, and you think whether there's an error on the ATM, no, it's because everybody there's withdrawing 1,500, 1,500, and all of that. So people would demand for items in smaller, retail, affordable units. That's one of the key takeaways. As businesses on the FirstGem, how do we understand what's happening with our consumers? Or do we want to give them products the way we've always given them? Because there's a place for empathy and there's a place for strategy within your empathy. How do I key in empathy into my strategy? All right? And so, overall, to round it up, for these parts, like I said, as a business, your online play has to be very strong. You have to expand your markets because the average Nigerian consumer is poorer. And how do you expand your market? Online play, meaning that there's a diaspora who is interested in your product. That diaspora, whatever may have happened to them, they are not poorer in Naira terms. In fact, they are richer in Naira terms. You may necessarily not earn FX from them, but you earn more Naira from them. And that also leads to an expansion of your market. So while the Nigerian buyer who's been affected by all the kinds of macro factors is more ruthless in his negotiation, the man who is sending £1 to buy a product is less ruthless because he's gaining an upside off you by buying from you in Naira. So you must expand your market and you must realize that the diaspora is an integral part of that market, either as a bank or as a player on the FirstGem market. And then something popped up in my mind as well. I was also my way here, but I didn't want to disturb the makeup of the slides already. And I'll end with that. There's a lot of money looking for opportunities right now. You know the good old saying, opportunity meets preparedness. There are lots of cliches that draw a nexus between risks and opportunities. That's happening as well. There's still a lot of good money looking for opportunities. In other words, as a FirstGem client, this is the time when I want to put my books in order. This is the time when I want to look more bankable. This is the time when I want to improve my corporate governance and increase every single factor that improves my bankability. Because good money is looking for good investment outlets. So like I said, it wasn't prepared. You won't see it when you get the slides, but you need to begin to think up of all of those things. It's not the time to begin to share ATM between the business and yourself. Pay yourself a salary, right? And improve the bankability of your business. Thank you very much, First Bank.
Thank you very much, Mr. Jimmy. To everyone who is in here watching, listening, I want to say something. I want to say I have been very, very guilty and very bad at not paying attention to the economy of Nigeria. I know I'm not the only one in this. It just feels, many times it feels like it's a lot of work. All I want to do is, how much is it? Okay, I buy it. Dollar has gone up. Yay, cry. Oh, when is dollar going to go down? But there's so much that goes into it. And I'm happy that FirstGem has brought up this conference for so many people to learn so much. When you said the consumer is poorer, I felt that. Because things that I think I could afford before the pandemic, and I'm looking at myself now and I'm thinking, do I really need this? I've had to prioritize so many things in my life. And I'm sure you who's listening, you who is watching, you can feel this pain. You can feel this pain, but it's also very important that we know that at FirstGem, we have financial advisors that will put you through your business, how you can go about it, how you can be better and create wealth for yourself and for your family, and also to, keep up with your lifestyle changes and things that go on within your life. Thank you so much, Mr. Jimmy. The questions are coming in, but before I go into the main questions, you said something about re-strategizing, connecting to people in diaspora and all of that. What if I am someone who has to manage my data? How do I go about it? Because you find that people, many times, you talked about the fish seller that has access to her WhatsApp. My fish seller too does that. But I find that maybe when I go to her store, good afternoon, man, I'm greeting and all of that. I say, she turned off her data. And she's managing. How then do people who have such little funds to use the internet, how then do they strike a balance?
Okay. I'll start off on a very hard note. The world has never been kind to the ignorant. Never. The world has always been a brutal place for the ignorant. Okay? So, if I'm into commerce, right? And my phone is a tool of commerce. What that means is that internet or data I'm buying becomes one of my input costs. All right? I see lots of sellers, and I'm the child of I like to call myself the child of a market woman. When you go on Google, you see something different. But I particularly like to address myself as the child of a market woman. Okay? Because I learned commerce from my mother, not my father. So, and one of the big mistakes from generation to generation, and I speak as someone who was close to a mother in the prior generation of commercial venturists, one of the biggest mistakes is looking at your input costs as solely your cost price. In other words, I went to the chairman, I bought this bottle of water as 100 naira. I didn't factor my transportation to fro. I didn't factor all the logistics and every other input cost. All I just looked at was 100 naira. So if I sell it at 105, I'm 5% better off. Okay? And you even see people who go to Dubai for years, buying and selling, buying. And after a few years, the business runs down. And so it's why you see so many people who sell, and after a few years, the business fails. And they tell you that I'm going for deliverance, it's no, right? It's failing to understand what your input costs were. Your input cost, you know, when you flew to Dubai to buy goods, right? It was part of your input cost. The hotel you stayed in was part of your input cost. Your transportation all across Dubai was part of your input cost. The ferrying of those goods, cargo back home, was part of the input cost. The calling people over there is part of all of those costs. It's not just the cost of the goods and maybe your airline. So for the market woman, the data, in addition to the transportation, in addition to the person who carries the goods from the bus to the market, in addition to the cost of the ice to freeze it, all of those things go into her input costs. Okay? And then, because the laborer deserves his wages, she should get all of those input costs, mark it up, and sell it to you. Fully recovering her input costs, being able to pay back FirstGem for their already subsidized loans, and getting something for herself. If she can't recover cost of data, is it the subsidized loans she wants to recover? When you can't even recover cost of data. Is it? So people have to understand how to use Excel, calculators, to thrive in business. These are basic skills. Arithmetic, not mathematics. Arithmetic. Additions, subtractions. Okay? And then as the business scales up, you get professionals to work with you. All right? Accountants, auditors, who work with you and check that you're doing the right thing, you're doing the wrong thing, so that they can correct you quickly before you become inured in the wrong ways. Okay? So when I hear and see people who say, my data, I'm switching off my data, then it's because their arithmetic is wrong. Okay? So that would be my own solution based on my upbringing and my understanding of commerce.
Fantastic. Thank you very much, sir. Round of applause. Thank you. Like that breakdown, I think anybody can understand it. As simple as it is. You broke it down fully, very well to everybody. Now, I'm going to go to the questions here. If you have any questions for Mr. Jimmy, please send them in. If you're watching on YouTube, you would have to send your questions in on the FirstGem portal. But for everyone who signed up for the webinar, please send in your questions. We'll be taking them one after the other. If we can't take them all at once right now, you would eventually get your answers on the portal. So Ayodele Shitu here says, given that central banks are printing more money to buy bonds and people are looking for ways to keep their liquidity, what is the role of the financial intermediation amidst the growing uncertainty?
It's very simple. It's to continue to provide us with opportunities for investable outlets. Okay? The work of a financial intermediator like First Bank is to mobilize funds from the surplus and give it to the deficit. Okay? So I'm saying to myself as an investor that what kinds of assets or what kinds of products does the bank have for me to invest, get good returns on them, and then the bank mobilizes these funds and then provides loans to people on them. So it's intermediation 101. Okay. So the question now is, people will be looking out for that bank, that partner, that asset manager that's got the most interesting value proposition for him or for her. So I hope that's clear to Ayodele.
Yes, Ayodele, I hope you're happy with this. This is from Onye. Onye says, kindly throw more light into the multinationals' unification of income.
Multinational unification.
Unification of income.
Okay. Did she mean income or exchange rate? It would be nice to...
Income is what is here in her question.
I'm not sure I understand that question. I won't pretend to understand.
Okay, so Onye, please, if you can rephrase your question properly, we'll be here to take it. Thank you very much.
Thank you, Onye.
An anonymous attendee says, thank you, Jimmy, for very insightful presentation. If we were to have functional refineries in Nigeria, would our local pump price still be subjected to international oil price fluctuations? In other words, is our local consumption still within the bracket of OPEC quota for member countries, or it's just about what we supply to the rest of the world?
I'm sorry to disappoint him. Refineries will make a difference, and I'll tell you why. Oil is an international commodity. There's no way Nigeria would have to be under the kind of cost we've never been under to sell our oil in Naira. Oil is an international commodity. When they call any product international commodity, it means that the pricing of that commodity, except the United States, is done in the US dollar. It's only the US that has the US and Zimbabwe on its day that's run their currencies in the US dollar. Zimbabwe on its day, meaning that tomorrow they may choose to abort the US dollar again. Okay? But for every other country, the oil is priced in dollars. So we'll be shortchanging ourselves, all because of our quest for cheap fossil fuel, which I said earlier doesn't go to the poor, goes to the rich and the upper middle class. We'll be shortchanging ourselves when we take subsidized fuel. Rather, so here I'm a policymaker and I offer you, choose you this day, what do you want? Good education for your kids, good health care, or cheap fuel, cheap petrol. And time again, Nigerians speak cheap petrol. We don't understand. Madam Chairman, you're correct. We don't understand. And that's why the economist once said that typically politicians do not understand economics. They only react to what the populace say. Okay? So if you want politicians to take a particular economic direction, do not speak to the politicians, speak to the people. Okay? The Nigerian populace want cheap fuel, which is why we're screaming about refineries. It's not that we're interested in refineries. All we're interested in is cheap fuel. That's our ultimate goal. Cheap fuel. But what are nations of the world doing? They're dumping that fuel, whether it's cheap or expensive, they're dumping it all together. All right? Dumping fossil fuel and going into electric cars, going into green energy, going into biofuel. We haven't even started talking about these 21st century trends. When do we want, we're 21 years into a new millennium, a new century, and we haven't even started talking, not even practicing, even talking. As a nation, we haven't even started talking about green energy, biofuels, electric cars. We're talking about fossil fuel refineries, and our government is spending $1.5 billion for that. Because the populace wants cheap fuel, not because the government wants to give us refineries.
Sorry to cut you, but how do we then educate the populace? Because many times, we just have a lot of people come out and shout, hey, it's too expensive. Nobody understands it. How do we teach people?
Good. Sometimes the markets teach you. Okay? Why did the big automakers in the US fail to the point of requiring government bailouts? It was market lessons. So if you check the antecedents of the American auto markets, they've always loved big fuel guzzling machines. All right? Big fuel guzzling machines. And then at some point in the world's history, there was an international fuel crisis whereby the rich Middle East countries placed an embargo on sale of fuel. And go and research this. It's on YouTube. You see documentaries, not just books. You would see where fuel scarcity in the US was mirroring that of Nigeria. Americans couldn't buy fuel. They were queuing up for fuel. You go to gas stations and they will put no gas, like X, no gas. And people suddenly realize that my car is consuming too much fuel because fuel prices have gone up. And then Japanese automakers, Toyota, get into a Toyota today and get into any of the American cars. See how basic the interior of it. And I'm not trying to downplay the superiority, the beauty of a Toyota. Because their value proposition was worth energy efficiency. And that's how Toyota became one of the world's largest automakers. Through innovation and through value proposition for the times. So rather than we looking for cheap fuel, we need to start thinking innovatively. And and I'm not even talking of complex innovation, basic innovation. We claim we have so much gas. I mean, why can't we start thinking of how to use gas to do more things than just exports? Okay? So our quest and our stay on cheap fuel has created all sorts of insecurities as well. And let me explain that. Do you realize that one of the things that we have used to sharpen our smuggling skills in this country is cheap fuel? Because if you look at Nigeria's fuel pricing vis-a-vis all the neighboring countries around us, we've got the cheapest fuel. So it creates an incentive to smuggle fuel out of this country. Ordinarily, we shouldn't be smuggling fuel. We should be exporting fuel to our neighboring countries. But we smuggle it because there's an incentive to do so. All right? And eventually, we've developed smuggling trading routes, which others are now using for all sorts of indecent things like weapons and all of that. Okay? So, the longer we continue with this play of subsidized fuel, the farther we keep ourselves away from the promised land of innovation in the energy space. Look at what we're doing today with telecoms. I mean, we're all alive. I'm sure everybody in this room was already well enough to understand how, when the phones first came into the Nigerian market. We have WhatsApp today. Initially, when WhatsApp came, it was only people abroad that used to use it to call people in Nigeria. Today, you and I are calling each other on WhatsApp. All right? It's innovation. So that's what innovation does when you allow markets to thrive. But we need to believe in the free markets and say to ourselves, how do we control the free markets such that they do not become, they do not grow unholy on their own? All right?
Thank you very much. We have a question from Temitokbe Omotosho about revenue and expenditures. How can we strengthen our internal generated revenue in the sector of the Nigerian economy market rather than continuous borrowing to sustain our economy? And what is your own opinion in putting checks and balances to it in order not to run into economy deficits? Thank you.
Okay. I'm sorry, Temitokwe, I don't have good news for you. The last anonymous questioner, I also didn't have good news for him. Okay? So, how do we strengthen internally generated revenue? It's a 3-letter word. We all know what that is. 3-letter word. It starts with T, ends with X. Who can tell me what's in between? Tax. Okay? There's no other way. That's how to strengthen your internally generated revenue. TAX. God has already blessed you with oil. What else do you want? We should bless you with what again? All right? Tax. Okay? But I like the second half of Temitokwe's question. It says that, how do you increase checks and balances? Because if I'm here saying that the only way we can fund internally generated revenues of the government outside of oil is by taxes, the first thing that comes to the mind of every Nigerian is, they'll come and steal my money. Which means that it's only a fair deal to ask for checks and balances on taxes. All right, I'll tell you what it is. I'm a student of The Economist magazine, and I got this off the magazine. The magazine says that for countries to hold their governments accountable, you need a large base of tax-paying middle-class citizens. Did you get that right? Tax-paying, not middle-class citizens. Tax-paying middle-class citizens. And I'll tell you why. The rich are too insecure in any society to want to change the order of things. All right? Don't give me too much bread so I don't curse my creator. The poor are too subdued with their everyday challenges of life, okay, to demand accountability from the government. Don't make me too poor so I don't steal bread. So it's the buffer that can demand accountability. And what would make that buffer being the middle class, demand accountability from the government? It's the fact that they pay taxes. Okay? Because I believe that I have a stake in the government to demand accountability. And what's my stake in the government? The taxes I pay. I'm not too rich to be unbothered about such things. Neither am I too poor to be saddled with everyday challenges of life, economic challenges of life, to demand accountability. So you've got to have a very strong tax-paying middle-class citizenry. And to round it up for Temitope, I'll give him an assignment or give her an assignment to do some more reading. When we speak about, when we speak with nostalgia about the Ikene philosophers' reforms as far back as 1953, okay, that's Sir Obafemi Awolowo. Go and ask yourself, go and read a bit more about how Awolowo funded reforms or funded initiatives like free education. It was taxes. So my family is filled with folklore of people who used to dodge here and there when it was time to, to face the tax man. Okay? So at the discovery of oil, we did what? We thought it wasn't necessary any longer to tax citizens because we had free money. And it's why oil is called the, all sorts of names like the Dutch disease, the oil costs and all of that. Okay?
Thank you very much, Mr. Jimmy. Can we give him a round of applause, please? To everyone watching now, I hope you are applauding at home where you are, because if you were to pay for this, you know you would pay through your nose. But we've learned so much from you, Mr. Jimmy. Thank you so, so much. Thank you to the FirstGem community for putting all of this together. Thank you to everyone who has stayed and is staying. There's still so much more to come. We still are going to learn what investors want, what your bank wants, the art of negotiation 101. There's still so much more to come. And since we are all in this business of buying, selling, negotiating, even with our children, you don't want to miss this. Up next, I would be calling on Mrs. Fumi Oyetunji. Mrs. Fumi Oyetunji is the chairperson of the LaSalle Foundation that grants scholarships to indigent students, and she is a fellow of the Institute of Directors. And she also is an author. She published her book, A Conscious Life, in 2016. I think it's something you can Google and purchase as you're watching this so you can learn more about her. Mrs. Oyetunji is going to come up to talk to us about what investors want. A round of applause for Mrs. Oyetunji, please.
Good afternoon, everyone. The first thing I like to do is to thank First Bank, because somebody did mention about if you had to pay for some of these sessions. And I keep coming back, despite very short notice sometimes, but that's because I believe that the work that is being done by the GEM project is work that is necessary. If you recall, the last speaker did say about the fact that the problem is that people didn't know. Just the lack of knowledge is one of the problems of the Nigerian population. So any project that seeks to educate our women, but I've heard so many male names on the question and answer, because I've been following the conversation all morning on YouTube. I have heard so many questions from the male folk that it just confirms to me what I've always thought. The male folk seek knowledge, whether it was prepared for them or not. So I was listening and I was thinking, this was meant to be a female or a gender-specific project seeking to educate our women, but even the men come on. So I wish to thank First Bank, because it's work that needs to be done, and the fact that you guys have chosen to do that work is a reason for me to thank you. Thank you for that nice intro, but I like to say first and foremost, I am a chartered accountant. I put up my hand for that. That is more or the most what I am, and my background is in both accounting practice and banking. I left First Bank in 2002 as company treasurer. So I kind of always say that the alone, I take hold of that. Having said all of that, I wish to carry on from what, because there is a lot that the last speaker spoke that I have down in my notes, and therefore it's good that the conversation can kind of continue on that basis. So the theme is the art of negotiation, and I believe what investors want is a very key aspect of negotiation from both sides, and is from both sides of the divide, the investor themselves and the investee. And a lot of times the investee believes that the aces are with the investor, and the investor comes and does or takes whatever he or she wants. But I would like to give you two good news today, or one good news and one better news. The first one is the good news, and the last speaker alluded to it. There is actually capital out there looking for investable businesses and where to put money into good businesses. So there is no shortage of capital at the moment, both globally and in Nigeria. And so that is the good news. The better news for the gender-specific listeners is that more and more we have capital seeking women-led businesses. And so there is gender-specific capital and fund looking for women-run businesses. And I will talk about it when I get to my slide that talks about angel investing. So I have tweaked the topic a bit. So first slide, please. I have tweaked it a bit. So instead of just saying what investors want, I have put a rider, what do you want? So it should not, when it comes to seeking and financing your startup or scale up, it should not be just what the investor wants. We will talk, my first 3 or 4 slides will be mostly tutorial about what the investor wants. But I have one last slide that I've put in black and white saying, what do you want? Because it's not what the investor wants, but it is an area that I think is increasingly getting important. Again, the last speaker spoke about all the things that are happening post-COVID and how products and businesses are changing tack. So it's almost a business market at the moment when it comes to finding capital. Founder, is it still just your money that you're spending? Family, friends, and I always include fools, because anybody that funds a startup is coming from the position of, I'll be foolish with this capital. We'll see whether it works. So fools, not from a very derogatory fool thing, but those who, you can also call those fools believers. The people who believed right at the beginning. Somebody believed in Facebook, you know, right at the beginning. Somebody believed in any big business. Somebody believed in MTN. MTN on the ground floor was, you know, people were begged to invest in MTN at par, $1 per piece. Okay? So those were the fools / believers. But the reason there will be a fool is that most startups fail anyway. So if you put money in the startup and it failed, you would look the fool. Then once you go beyond that kind of funding, you come to the cycle where everybody now knows that your business is working. Therefore, you have you can do a presentation for grants or banks. He was, the last speaker again was talking about make your business bankable. It means that there's a business that can be bankable in the first place. It means your business is working. So you get to that point and you begin to look for grants and bank loans. I come to angel investors because in the last 4 or 5 years, I've become very active in it. I'm a member of the Lagos Angel Investors Network, and there is a female syndicate called the Rising Tide, Nigeria. The Rising Tide is international, but there's a Nigerian arm now, which seeks out businesses that are, female-run businesses and help. I talk about angel investing to this group to the FirstGem customers, because beyond the bank loan, there is funding out there that provides you not just money, but is providing mentorship, is looking at startups and scale-ups at very early stage. So I will talk about that at the last slide also. Then you're able to go to the angel investor, and most of what I will say in my next few slides is what, as an angel investor, I would be looking for if I was investing in your business. So when I say what do investors want, I'll be talking from that end mostly. Venture capital means that your business would have gone beyond, you've known VP houses that buy into businesses, usually more matured businesses. I imagine most of the FirstGem customers have not matured to that level. But that is usually the next level when the business has run for quite a few years, is established, and a venture capitalist comes in to put money and own a good chunk of the business. Next slide, please. Like I said, it's almost tutorial, so I'm going to almost go quickly through this. So the difference between capital instruments. So for equity, it means that you need to establish evaluation. Your business is running, you can establish evaluation. It's the only way you can actually create equity, because it's based on that valuation that you create shares. It increases investor control via a board seat, usually. It mitigates investor risk, so they say. I'm not quite sure about that. It depends on who the investee company or business is. And then it dilutes the founders. Now, let me talk about this. Please go back. Let me talk about this slide and this particular form of investment or finance for you. It all looks bad. If you look at it, it says, oh, you have to get evaluation. It says, oh, it increases investor control. Who wants control of their business? And then maybe a board seat, you have to give that away. And then it dilutes you. It sounds all like bad news. But the question I want to ask you is, why is all of that bad news? Why? Unfortunately, we don't have a full room, so we can't take polls. I love to speak to business people and take polls. I go hands up and things like that. And from the room, I can tell whether it's 25% or 30% or 50%, but you can't do it. But think about it. I know how small business owners feel about control, about dilution. But the question I usually ask business owners is, isn't equity actually longer term capital? Isn't it actually cheaper capital without fixed costs to it? All those are there, and if you're lucky to have good shareholders, they bring much more to the table, sometimes that you cannot quantify. They bring access to a network. So I usually say, while that slide talks about things that should put you off equity, you must think properly whether you're at the stage where actually equity financing, and if you can let it happen, if you can make it happen, because you can only make it happen if you can get a good valuation that is attractive to people. Thank you. Next slide. So debt, I'm sure FirstGem customers know about debt. They know what comes with it. You don't have to price your business. You just want to make it clear that your business can pay the money, pay capital and interest. So it makes it seem easier. It's less expensive because you won't go through all the legal documentation, although you are charged legal fees by the banks. It's faster to negotiate, and usually no board seats are required. However, the last thing there, it talks about it can affect cash flow. For a small or medium-sized business, everything is cash flow. Everything is cash flow. Now, if you do not pay your equity holders a dividend in 1 year, they will grumble, but you're not obligated to, right? But in terms of a debt, you would have to pay at least interest, and sometimes obligated capital returns. So your cash flow is likely to be dipped at one point or the other. Having said all of that, it is still the source of financing that you know that is available to you when you have not grown your business to a very good stage. So now let me come to the slide that talks about what investors actually look out for. Next slide. So the investor looks at a business. When an investor is asked to come and invest in a business, one of the first things in recent times, I'll go to the items on the slide. By post-COVID, investors are beginning to look for businesses that have taken or can take advantage of the post-COVID era. The investor knows which kind of businesses are attractive now, because it's even for the business I run a portfolio company. I am managing director of a portfolio company. When we invest now, we consider what is old economy and new economy. So what is old economy? Old economy was everything we did, not only pre-COVID, but just like you had industrial revolution, and then now we have the fintech or the technology economy. More and more, investors are beginning to look for investments that take advantage of technology one way or the other. And now, don't let this sound like a high-falutin business. Food business can take advantage of technology. During COVID, I had to do a bit of a workshop for the ladies in church, because I noticed that quite a lot of them were selling food during that period. And we tried as much as possible to organize them such that they can become businesses that, can grow based on technology. Everybody must eat. Pre-COVID, post-COVID, we all are eating. The point is, we found out that it was so fragmented, and we were trying to remove that fragmentation by including technology and to embed technology in the business. So when you think about what investors need or want now, investors in Nigeria, Nigeria amazes me. The investor group or the investor society in Nigeria 5 years ago has totally changed to today. Probably because they have invested, they have failed in some, they have gained in some, they have seen the ones that work. More and more, investors are now seeking the kind of investments that would give them the kind of exits that they require, and that will be more paying. So one of the things that an investor will look for is a team. It can be a team of two. It doesn't have to be a large team, but it's a team. Investors have found out that if there is no team, if one person walks, gets tired, is ill, there's no business. So investors would question you about your team. And I have heard people, especially female-led businesses, talk about their passion so much and the fact that it's all about them. This passion, all about me, is a good thing, because we need passion to lead that business. You know, that business is not going to go anywhere if there's no single person with the big passion. However, everybody is now looking for a team. Everybody, even if it's a two-man team, basically for stability of that business. I have here something called problem and vision. You will be asked more and more now when you attend like an interview with investors. They would ask you what problem you're solving and what's your vision for that problem. And here, when I'm coming up to speak, I try to follow the conversation earlier on. I'd been on YouTube while I was doing other things. I was on YouTube following the conversation. But when I came in now, I also listened to the Augusto gentleman. And one of the things he talked about was what problem and what vision you have for the problem you're solving. At the moment, I am dealing with, we're trying to invest in a company, two companies. One of them is what he mentioned, money transfers. Now, all of a sudden, the money transfer business has been broken into tiny, tiny pieces, and everybody is kind of plugging in different ways. And when the investor is interviewing in that area, we're trying to see that it finally fills in to that chain of problem and solution, okay, and how it would make money be in that solution. So the problem everybody appears to be trying to solve is that. He also talked about diaspora money. Diaspora money, I must have seen 4 businesses in the last 3 months where people are trying to solve the diaspora money coming in. Guess what? 3 of those businesses, they are not even sitting in Lagos. They are now the diaspora themselves who are creating businesses to follow money into Nigeria. So, as much as possible, if you're trying to find capital, think about the problem that you're trying to solve. Make sure it's in today's economy and the vision you have for solving that particular problem. Value proposition and product. I will take both together. Let me talk about value proposition. I've spoken to founders or business people who you ask them, so what's your value proposition to me as an investor? Why am I putting money in your business? And I'll give you a tiny example of a decision we've just made that would make you realize that investors need to have a reason to go in. We were at the network, we were contacted by a business that is doing very, very well in what I would call the payday loan. Very, very, I won't tell you the details, but they seem to have cornered that market and have all the structures to do very well, and they're doing very well in it. And now they're also asking for capital. And we all see that that business is doing very well. It's paying very well. It's a wonderful, wonderful dividend play at the moment. Okay. But in breaking down how money comes and who takes that money, there were like 3 steps. They have to get capital at a very high cost. So when that gentleman was saying, if Nigerian government says when inflation is 15%, I need to give it money for 2% or 3%, they knew that if they were to ensure of their capital, and they do it so well with technology, they would tell you they don't need capital at some point. They would not take deposit. They will actually not take deposit. But to manage the volume of the business they have, they know they have to pay beyond inflation. So they do that. So that's the first chunk of people. The first chunk of the money goes there. The second chunk of the money is what is actually what makes their own business work. There's a cost in there. That means that they get the payday loan and their money, they don't have what you call money, what do we call it in risk management? Money at risk. They almost don't have that because of their structure of work. The money comes back automatically. So there's a cost to that. So the next chunk of money, and I would say 25%, 25%. And most of the time, the rest of it had come back as dividend play. Serious dividend play. So we saw that, we knew it worked, and then they were asking for equity. And the investors were saying, so tell me what is going to happen with this business. How many X? What X do you think I would get at exit in 5 years? They didn't find their way to that. And I don't blame them. It's just, and I'll come back to the kind of financing you need when I'm talking about it. There are certain businesses that just don't do that. It's different from the normal technology, fast X thing. So everybody understood that. Okay, fine. So, but this dividend trail that you have said is good, and we know it's good. As a new investor, how am I going to get into it? The only reason we couldn't carry on with it, do you know why? They overvalued their business such that if you bought today, that dividend trail will not happen for you. So we had to say, you know what? We love you. We know you're doing well. We're happy for the original investors. But that chunk of money that was on the table, guess what? We'll put it in deposit. And that's what we did. And we get our yield back, knowing that we're not looking for a great exit in 5 years. But our money wasn't going to be the cheap money to, become fixed costs that would not yield. So I'm saying when you have an investor talking to you, think about what is the value proposition for them. Because it is important. They're not Father Christmas. They're not CSR, like he called First Bank. But by the way, it's not CSR. He wasn't just looking at the cost of liability and cost of asset. So, thank you. So, now, product. Your product more and more should be a product that is solving, like I said, solving a problem again. If your product is not solving a problem and your product is not competitive in the market, everybody is selling food all of a sudden. For how many people, I know all these people in front, they've gotten Easter menu. You've all received Easter menu, right? Have you compared to see which one you actually think? All these people in front are not going to choose based on the price of the Easter menu. Not necessarily. It depends on what is inside that menu. Yes, it's value in the end. So make sure that your product, in comparison to your competition, is attractive to the niche market that you're seeking. I have received Easter menu that has basmati jollof rice, and I'm thinking it's Easter. Okay. While I have seen some very jazzy menus, and I know they're good, and I know I'm paying 1.5x, but it's Easter. We're not going to eat Easter menu every weekend. So let's do Easter, So make sure your product fits the niche or the market that you're seeking it to go to. And investors look for that. I'm just telling you how the investor's mind is thinking, because all they want is to increase their own value by investing in your own business. I have talked about scalability in this forum before, but there are some people who probably didn't listen to, who were not here at the time. Scalability is so important, and that is why there is a bit of a gender issue for me. A lot of female-led businesses don't think too much of scalability. It's working. It's good business. It's making money, but it appears as if scalability is not considered. All because it ties back to that first problem I said, the team. Because it's just the team of one or team of 1.5, that business is not going to scale. And if that business is not going to scale, people are not going to want to invest in it. Now, I want to talk about exit. Most small or medium-sized businesses don't even think about exit. When you start a careerist job, it's fixed. Your exit is fixed. Okay? I am not saying we need for you to retire. I'm not saying that we need for you to retire. I'm just saying that you need to think about the exit for the investors. The exit for the investors doesn't mean they would take their money out. It means in 4 or 5 years' time, your business has to be able to be valued at something X. And in that, their own value goes up. If they want to exit, they exit. They can continue with your business. But if they want to exit, the thought of exit must be in your mind. And if that question is asked of you, you need to be able to talk about it. So, let me quickly go to this, my last slide, which I have done in black and white. And it's for you rather than the investor. I call this slide considering the real. Considering your own peculiar circumstances. Because they are important. But sometimes in seeking capital, we do not, small businesses or business owners don't think from their own point of view because they think the person that's going to put capital on the table is more important than they themselves. So they don't think. So at this point, I'll give you a small real story. And the small real story is about myself. When I came out of careerist 19 years ago, it's 20 next year, 2002, what is your own trajectory? In deciding what I would do, I had to think, and I'm saying this for especially the females, because it's a gender thing, and to deny that it's there is not true. Okay? So at that point, I needed to do a business that would meet my own personal peculiar circumstances. So I didn't take another careerist job because I knew that was, my boys were beginning to go to boarding school and all that. And I remembered my days in the meeting rooms of First Bank when I was in meetings until 10 p.m., came out and saw phone calls with my secretary of my son called, and when you called him back, he said, "No problem, Mom." "No problem. How? You called 3 times. It's all right, Mom." It's all right, Mom. So I knew that whatever my business was, whatever my work was, had to take care of that section without bothering me. So I went into business. And for those who know me from that past, I started off by trying to run a franchise company. But even as I left, I knew I was going to do either of 2 things, or 1.5. I knew for sure that real estate was the one, because I had been funding real estate in my job, and I knew the cash flow, and I knew that I had connections to fund it. So I went into that, and the rest is very good history. And now, somebody said to me on the investment trail recently, angel investor, Angel investors don't invest in real estate businesses. Why? Because real estate businesses is not something that does that 5x in 5 years. We don't know. It's only in Lagos that Banana Island did 10x in 10 years. However, the Forex made it become 2x in 10 years. So that's something that you need to consider also. So nobody invests in it. So the kind of funding that I needed had to be loans. I was lucky that I was just coming out of banking, so I had the network to lend me money. So the kind of business you want to go into and the kind of funding, you have to think about it from your own peculiar understanding, circumstances. So what I have there, your own intention for the business trajectory, what ownership structure you have in mind. Unfortunately for the female, ownership always includes family. Even if it doesn't include family on the paper, it does include family. We all know that. So it's there, and you have to think about it. Do you have the freedom to invite just anybody to invest in your business? Most of the time, as females, we don't. So think about your own circumstances, the kind of funding that will be appropriate to your business. The final thing I have here is, what do you need beyond money? As a small business, I'd like to say to you that you need the cash, but you need much more beyond money. You need mentoring, you need holding of hand, you need a network, and you need to find your funding from where you get all of those things from. Thank you very much.
Thank you very much, Mrs. Yetunji. Thank you so much. Very insightful. Before I go to the questions that are coming from our virtual audience, you spoke about, I saw the factors that you laid out for what investors look for and all that they need to get before an investor comes in. But I want to ask about the beauty business. It's a bit saturated. Do investors invest in beauty businesses? Well, I think in almost every family we have one makeup artist or someone that's beauty in general. Are investors, do the same factors apply to businesses like that?
Interestingly, the beauty business is one of the businesses that we seek to invest. We have been seeking. The problem is the fragmentation. I don't want to invest in somebody who just goes to make faces on Saturdays. Okay? So again, just like the food business that I talked about, the beauty business needs to think about itself, or a business needs to think about itself from all those factors that I have listed. Talking about a team, maybe there's a hair person, there's a body person, talking about solutions. Okay, are there solutions? What are the problems that face me today in beauty? Is there a solution that says that in 10 minutes I can get somebody come and do my nails at home and go away, not too much trouble? Do you have like little boxes everywhere? There could be, just like you asked me now, if there's a beauty business that has boxes in almost like every 5 streets, like the Redeemed Church, it probably would work as a business. It would be considered as a chain. So it is whether you structure it such that it gives those things, and almost any business can. And if you know about the beauty business, beauty products, you should see the kind of figures that they say that beauty product business is in Nigeria. It's huge. It's huge, because when Nigerians don't pay school fees, sometimes they manage to buy the hair. So, so honestly, the beauty area is an investable business, but it has to be well structured. Thank you.
Thank you very much, Ma. Okay, we have Simi Adeoye here asking, what is your take on sweat equity? If you're being given an equity for all your efforts and hard work by your company, are you on the same level with an investor who also has equity? Also, when you leave the company, do you still have access to your equity, or it has been forfeited?
Thank you very much. You know, when I talked about angel investing, let me tell you, the basis of angel investing is that the founder, the owner of that business must have a higher shareholding than people who are bringing equity. They are not allowed into Y combinators if their investors have higher than them, because they are the soul of the business. So please, every founder, your business, your sweat equity must be higher than those who are bringing money equity. It's important.
Thank you, Versimi. I hope you have gotten your answer. This is from Hosanna Noble Amadi. Dear Mrs. Oyetunji, you talked about food business. Please, what is your opinion about education? That is, school business. How can a school owner seeking to expand her school attract investors?
Thank you. EduTech is a big thing at the moment. You know, technology being applied to education. I have a friend whose mother has left her school, and we're as much as possible trying to convert it into a school that is supported by technology and how we can make it. Education, almost like food, is what everybody must have. You know, every family, they do get their education, their children educated. So, yes, there's a lot of investment going into, but the two I have seen, I don't know whether you know them, you will see them on Gradely and ULessing. They are, you know, education technologies whereby they can tutor your children and things. I am advising this friend that it's no longer about your brick and mortar school. Something there needs to be a connection between that and how education can be provided through technology off-site. More and more, see what happened during COVID. All the children were attending school from home. So post-COVID, a lot of people are going to insist on playing the way they played during COVID, okay? People are calculating office spaces that they need. It might be, they are thinking about letting half of their staff work from home to save power, to save, you know, all kinds of things. So an educationist needs to think about making it scalable beyond that brick and mortar. Thank you.
Thank you, Ma. We have another one here from Anonymous saying, you spoke about the teamwork. How do you attract the right people in order to create a formidable team? If you have invested in a school business, what kind of team would you look out for?
Okay. Thank you. So when I said team, I didn't, you know, stop. I was trying to stay within the time. When I said team, it depends on the skills people bring. So for each of the business we're considering or your business, what do you think are the skill sets that are important to take your business from one level to the other? And I talk about the team of two a lot, just to encourage small businesses. To be seeking a large team at the beginning of your business is to cause undue stress. So, but you have to find somebody who shares your vision totally, who bring different aspects or skills into the business, because sometimes when two people bring the same skill, there's a lot of stepping on each other's toes. But for the school team, a business person is different from the educationist. Like this school I'm talking about, my friend has taken the business sense into it, but she knows that the headmistress is important from the point of the educationist and dealing with parents. So it's the skill sets that you require. You need to know the skill sets that would make your business successful. So that's what it is.
Thank you, Ma. Earlier, you also spoke about the company that you wanted to invest in that overvalued themselves, and if you had gone into that business, you would have been at a loss.
Yeah.
How?
I don't know that I would have been at a loss, but in our mindset, we thought it was overvalued, and that we could make money from the business in another way, you know, rather than equity.
Okay, so how would you advise a company to value themselves?
The short answer to that is take professional help. And because, okay, I'm asking somebody, another one, I'm asking them a question. As I came here, I sent a text. I said, what's your EBITDA at the moment? Your earnings before tax and interest and...
Thank you.
So I said, what's your EBITDA at the moment? In quantum and in percentage. So I'm looking whether their valuation is working for me. I'm going to look at evaluation and say, EBITDA times what is this person calling their valuation? And there are times like fintech where those multiples can be large these days. But that's because we know that in a fintech, the propensity to scale up is so easy and wide, such that we want. But like I was saying, real estate, EBITDA we cannot take your valuation as huge multiples because it's not going to increase. Your business is not going to have that kind of volatility. So take professional advice beyond the people who are trying to invest, and they would give you advice as to the kind of EBITDA and valuation proposition. Thank you.
Thank you very much, Ma. If you have any more questions for Mrs. Oyetunji, please still send them to the FirstGem portal. Send them to the FirstGem portal. And yes, your questions will be answered. Thank you very much. Can we give a big, big round of applause to Mrs. Oyetunji, please? I hope that we've been able to learn more than one thing about what investors need before they invest in your business. No matter how big it is, no matter how small it is, investors can come in different ways. So I hope that you've been able to learn from this and you will definitely apply it to your business. We're going
Can
to
I just make a comment if you
Yes,
don't
please,
mind?
ma'am.
Okay. So the thing to note is the essence of this session is for you to, even before you get to the point where you're looking for an investor, to have a sense of what the investor will be looking for and to organize your business with that mindset, which means that you're ensuring that all the books are kept, that certain parameters are met, that you're not just competing with your scale at that stage or with others that are just like you, but you're competing with an expectation of how you want to finish and at what point you will become a bride to investors. Ultimately, what it does is it helps you to build a more stable, sustainable business that can compete effectively at any point in time. It helps you to build a company that when you find yourself in the middle of a situation like the pandemic, you are in a situation where your ability to survive is stronger. So look at your business and be true to yourself from the outside view of an independent investor who has an economic goal for evaluating your business. But do it yourself. And sometimes if you can't, ask. There are quite a number of small consultants that are affordable, whatever the level of your business is, and allow them to look at your business objectively and give you an honest view that you then put a plan of action into play so that you can set yourself that over the next 2 years or 3 years, I will be ready for investors. What are the things that are missing? What do I need to do? That's everything that Mrs. Oyetunji has told you today. And is now, how do you organize your own businesses? When you do that, the banks will chase you because they're looking for businesses that are more stable, better structured, and have the ability to grow. When the investors in certain sectors come, the challenge, as always, look, there are many funds available right now. There are grants, there are specific funds for women-owned businesses. There are a lot of PE funds. And I know that you read about 1 or 2 people's bad experience, but always find out exactly what happened. Don't get carried away with just the part of the story that you heard. Find out what they didn't do or what steps or actions led to a situation like that. And you address them. But more than anything else, structure your business to be fit. You don't ever have to bring in investors if you don't need them. even though they offer you discipline in many ways. But act like you need the investors and structure your business for that competitiveness. They help you with attracting capital outside of equity investment. And at the end of the day, you will benefit from having a stable business that is able to survive in every situation. Thank you.
Thank you very much,
Mrs.
Joa.
Oyetunji.
Thank you very much. I hope you're enjoying yourself. You're having a good time on here. Like I said earlier, if you were to pay for these sessions, you would pay through your nose. It's so much. Our chairman said your nose will not even be enough for you to pay for all of this. So there's so much. I personally have learned today. Like I said earlier, I took for granted the fact that it's not just about buying and selling. There's so much more about creating wealth that women need to understand. We need to be part of these conversations. We need to understand it and now apply it to our personal lives and to our businesses. The theme for today is the art of negotiation, and we'll be getting to that very soon. As women, we negotiate with our children, we negotiate with our siblings, spouses, when we go to the market, different things. I'm not talking about hostage situation here. We're talking about business now. Yes, how we can improve ourselves, our negotiation. I personally want to learn so much about this because most times I think I've been opportune or privileged to have people that will negotiate on my behalf. So I'm really open and waiting for this session. And please don't go anywhere. We'll have breaks in between. You can get your water for my virtual family. Get your water, get your food, whatever it is that you want to relax and ease into this next session. Please get it close to you. If your friends and family, sisters, aunties, everybody, even uncles, brothers, are not yet part of this, ensure that they join us on YouTube. On YouTube, we're live, and you can see everything that's going on. You can also just tell them to just watch with you. Drag them from whichever room they're in or in your office. Let them come and sit down and watch with you and take notes as well. It's important that you take notes. To be part of the FirstGem community, all you have to do is visit the FirstGem portal. I know some of us, we can be lazy and say, oh, will I go and start typing FirstGem on search? No. You can go to Instagram, follow First Bank Nigeria, and just click on their link tree there. There's so many links to different portals about First Bank. Everything about First Bank is on there. You would see the FirstGem portal there. Click on it, and then you can take everything on from there. Still to come, we have the seed fund, winners from the seed fund. Yes, the first prize is going away with 500,000 naira. Second prize, 350,000 naira. And third prize, 150,000 naira. So if your friends and family have sent in videos some weeks ago, there was a call to action. If they had sent in videos about their businesses, different pitches, tell them to stay tuned. You never know, it just might be you, it just might be your friend, it just might be a family member that will be walking away with a prize today. Now we're going to be moving on to Negotiation 101. And we're going to be having all the way from Barcelona, Professor Kandap Mehta. And he's going to be talking about the art of negotiation. Professor Mehta is a PhD holder from IESE Business School, Barcelona. And he has been with the Entrepreneurship Department at IESE as a senior lecturer since 2009. He's also actively involved in creative industries, and he frequently collaborates as a performer, actor, and consultant with theater and TV productions. Ladies and gentlemen, a big round of applause for Professor Kandap Mehta.
Hello everyone, thank you, thanks a lot, and it's a pleasure to be part of FirstGem. It's an honor as well. Of course, Ms. Sebukun has a special place in everybody at ESA's heart because she also belongs to our international advisory member. International Advisory Board, and well, I'm happy to be here once again to talk about negotiation. We have a lot of issues to cover today. We are going to talk about negotiations. We are going to talk about why we make certain errors in negotiations, and we don't realize that we are making those errors. And we are also going to, as per the theme of FirstGem tradition, we are also going to talk about women and negotiation. So we have divided this session. First of all, we will talk about negotiation basics and the biases, and then we will talk about negotiation and women in the second half of this conversation. So well, I'm thanks for the introduction, and I'm excited to be here once again. Well, so since we have a huge family here, our First Bank family is there present physically, and then we have a huge family connecting virtually to this session. So what I'm going to do is I'm going to run a quick exercise. So in fact, I would love to have have some of you respond to this. You can use the chat to respond to the questions, because I will be asking lots of questions. Uh, because negotiation is can never be unilateral. If it is unilateral, it is not negotiation. There has to be a dialogue. So I will ask you certain questions, and I would request you to respond through the chats. Okay, so let me before I proceed further, is everybody able to look at the slide? I Since I have on my screen the slideshow, but Ms. Bisola, if you can confirm, can you all see the slide? Okay, I assume it's a yes. So I want to ask you a very, very quick question, and you can write your answer in the chat. Uh, how much of your professional time do you spend in some sort of negotiation? So how much of your time do you spend negotiating? Would you say 80%, between 60 and 80%, 40 and 60%? Okay, so I started receiving responses here. 60 to 80, 40 to 60, 40 to 60, 60 to 80. Okay. So here I can see that a huge percentage of you spend between 40 and 80% of your time doing some sort of negotiation. Now, this actually shows the importance of negotiation and the importance of this conference. 40% of your time is a lot of time. Imagine a work day, 8 hours or 10 hours, a relaxed kind of a working day where you work for 8 to 10 hours. And 40% of that time is spent in some sort of negotiation. That means you end up spending close to 3 hours in some sort of negotiation every day. And by all means, this is not an overstatement. In fact, some of you negotiate a lot more than you realize. So imagine practicing any other skill for more than 3 hours a day. Imagine running 3 hours a day. Imagine playing tennis 3 hours a day, or playing soccer 3 hours a day. The outcome would be that we all those who spend between more than 40% of the time, can represent their countries in Olympics. If negotiation were a sport, in fact, the entire group of close to 2,000 people that is right here, all of us can probably be professional negotiators. We can be professional athletes of the sports of negotiation. So the question is there any disadvantage when we exercise a skill so much? Is there any risk when we exercise a particular skill a lot? A line of research in sports, which looks at the way in which athletes perform under uncertainty. It shows that when stakes are high, an athlete tends to do what she or he thinks to be their best skill. So imagine a Serena Williams playing a very important game, a final, Grand Slam, and a critical moment comes, and she has to choose between different options. Should she play backhand or forehand, or, what would she do? She would do what she thinks she does best. That's what we all do. That's what all athletes do. When stakes are high, they do what they think they do best. And that's where often we make a mistake. Because often what we think to be the best the best response that we can give may not be the best for that situation. And that's why it is important for us to always know how to read the situation. Let's look at a quick example. In fact, you all can participate. Here is the example. All of you can look at this beautiful car on your screen. Yes, thank you. Thanks for the heads up. So now please tell me, you want to buy this car. I'm selling it to you for 16,500 US dollars. 16,500 US dollars. That's what my offer is. You would make me a counter offer. Please, in your chat, tell me what would be your counter offer. How much would you offer in return? Okay. Somebody wanted to look at the car once again. Here is the car. And what would be the counter offer? Okay, so I'm receiving lots of answers. Some of you have gone as low as 5,000, 7,000, but most of the answers are somewhere between 10,000 and 12,000. Okay, just a minute. Let me. Okay, so most of you have said that you would probably offer somewhere between 10 and 12,000. Now, on what basis have you taken this decision? Let's try to understand some more interesting details about this exercise. So now if I tell you that your budget is 17,500, would that change your answer or not? Let's try to have quickly your responses through chat. If your budget is 17,500, would it change your answer or not? No. So most of you have said no. This is also known as anchor effect. Anchor effect basically means the effect that you have on the initial information that you receive. A friend of ours at MIT used to do this interesting experiment where she would get into an undergraduate class and she would ask everyone to write down last 3 digits of their social security number, and then she would show a random product. And she would say, what would be the cost of this product? And there would always be a very high correlation between the 3 numbers and the estimate of the price that people would come up with. As some of you have figured out here that we don't have the correct valuation of the car. That's a very interesting approach because often in a negotiation, we may not have all the information necessary. So I have given you one more piece of information that 17,500 is your budget. Will it change your answer? You have said no, it will not change your answer. Now my question is, I had made my offer, which was 16,500. You had made a counter offer that you had mentioned in the chat. Now my question is, what do you think will be the final settlement price. What do you think will be the final settlement price? Excellent. So most of you are trying to find a point between what we have offered each other. In fact, somebody says here halfway. And Nenna Ejiogu, I'm sorry if I mispronounce any name, but Nenna Ejiogu here writes that we will meet halfway. There will be uh, a meeting of positions, and that's where we will close the deal. What happens in negotiations often is that we have this perception of moving positions. We often think that in a negotiation, the offers that are made are subject to change. Now, when we enter with this perception, often we do not take the first offer that is made seriously enough. And that's why we do not understand, or we do not realize the psychological impact these first offers have. That's why it is very important to have a clearer picture of the potential range of negotiation before we start the negotiation itself. For example, what I'm talking about right now is very unilateral kind of scenario where I am telling you this is my price, this is your budget, what will be the final offer. But there are many other factors which we don't know about. For example, let's bring a little twist to this story. You are a vintage car collector and you have been looking for this car for quite some time, and your budget for this year is 22,500 US dollars, and you want to participate in the annual vintage car exhibition. If you take this car to that vintage car exhibition, you might win the best collector's prize, and that is worth $100,000. Okay, so now your budget is 22,500. You want this car. If you take it to that exhibition, you will get 100,000 prize. Your chances, they just go up of getting that prize. Now my question is, what is the highest possible price that you will pay? What is the highest possible price that you will pay for this car now? I have already told you that your budget is a bit higher, 22,500. And if you take this car to that exhibition, you might get that $100,000 very coveted prize of the best collector. And now we are receiving very interesting answers. So 16,000, 17,500. Somebody says 22,500. Oluwafemi says that I will pay up straight at the asking price because I want to take that car and get that $100,000 prize. Many of you have said that you will pay straight up 16,500. Some of you have said that, well, it is not yet certain. But here now we clearly see an increase in your willingness to pay. Some of you have said that you will max out your budget. Tosin says that since it was offered 16,500, so let it be. I don't want to spend all the 22,500. And some of you have said that you will be able to go up. And this is the way we always take decisions in any negotiation. Think of some of the most crucial decisions that you have taken during a negotiation, or think of some of the most important negotiations. Often in a negotiation, we have an offer from the other side, we have our budget, we have our limitations, and we take decision on that basis. That's how we buy houses, that's how we buy vehicles, that's how we even accept job offers. The question is there something missing in this entire line of decision making? So let me give you one more piece of information. If you don't buy this from me, I will sell it to another seller who is willing to pay me 13,500. What is the maximum that you are willing to pay me now? If you don't buy this from me, I have somebody else who is willing to pay me 13,500. And now I get the answer that I will match 13,500. Some of you, there is one very Etagogo and Ayun. They say they will pay me 13,501. I am so thankful for that one. That is a very interesting answer. But now you see how your decision has changed. In fact, those of you who were willing to pay me 16,500 because you were looking at the subsequent $100,000 price, now are willing to pay me 13,500 or 13,501. What has changed in these these 30 seconds? What has made you change your mind? If the car was worth 16,500 to you a few seconds ago, why is it 13,500 worth now? Yes, as some of you are pointing out in the chat, it is information. But what information? What is it that you got to know that made you change your mind so much? You got to know about two important things. One, you got to know about the need that you had in the first place. Think of the entire, thought process that we have had. Generally, so I have used this information in experiments as well. And I always see that the initial reaction is when I say 16,500, the average I receive is 10,000. And that's why I always find people closing at 13,000. Then when I put this information of 22,500 and 100,000 of price, then the 13,000 straight away goes up to 16,000. People are willing to pay whatever I'm asking for because it is satisfying a very important need for them. The car is a lot more valuable because the car is creating an opportunity to win those 100,000. But then when I say that my alternative is 13,500, you start questioning. Yes, I am going to win 100,000, but that is not the real value for the seller, for me in this case. Because for me, the car is only worth 13,500 if you do not buy it. There is a very famous term in negotiation called BATNA, Best Alternative to Negotiated Agreement. In every negotiation, when we negotiate, these are two fundamental elements that we have to have in mind. One, we need to know what is the need, why the other person is doing the negotiation. And two, we need to know what are the alternatives. What is it that the other side is going to do if they do not close this deal with us. So negotiation being primarily a value creation exercise, there is always a possible zone of possible agreements that we need to keep in mind. We always need to figure out what is that range within which all the possible agreements are there. When you have only two pieces of information, 16,500, the price, the offer, and 100,000 prize that you can win, for you the zone of possible agreement starts at 16,500 and goes up to your budget of 22,500 because you are thinking of your need. But the moment I tell you that my alternative is only 13,500, that perception changes. This is the essential exercise we need to do in every negotiation. In every negotiation, we need to find out what is it that the other side is going to do if they do not close the deal with us, and what is it that we are going to do if we don't get this product right now. These two answers to these two questions will tell us what might be the likely deal. However, it is difficult to assess the zone of possible agreement. It is generally very difficult. Why? It is difficult because often in a negotiation, we do not have the kind of information that I just gave you. For example, if we were really buying or selling this particular car, I would not know that you are a collector. I would probably not know that you are a collector, but you might end up winning a prize if you get the car. On the other hand, you would not know that there is somebody who is going to pay me 13,500 if you don't buy from me. That's why every negotiator is expected to be a daredevil. I'm sorry for my comic books obsession, but I find this character of Marvel Comics very fascinating. Daredevil is a superhero and is blind. And that is what every negotiator is expected to be. Think of all the negotiations you do on behalf of your organization. They expect you to be the best, to get the best deal, but at the same time, we don't even know what the other side is really thinking about. We all need to be a daredevil, blind superheroes in every negotiation. So, let me take you through a tour of certain questions and answers and try to understand how can we really get rid of these blind spots. Okay, so let's start with this question. You can once again use your chat and respond to me quickly. When is it easier to detect a deception in a negotiation? When somebody is cheating you? When is it easier to detect a cheater? Face to face or using emails? Okay, I'm receiving face to face, face to face, face to face, face to face, face to face. Wonderful. I think this is 100 to 0. Everyone has said face to face so far. Okay, some people have said both. Yes, cheaters are going to cheat anyway. Somebody said, well, it depends on luck. I completely agree. It depends on luck. Okay. So this is the general perception, and this is also, true because, when we are face to face, if, somebody is trying to lie, we may say, hey, look, you are lying. What happens in a negotiation? So there is a greater possibility of lying, detecting a liar in face-to-face interaction, which is true, uh, rather than in email. However, there are some important limitations attached to this. What are those important limitations? First of all, there is a greater tendency to deceive over email interactions. Why? Because we all know that face-to-face, people are going to detect deceptions anyway. And that's why when we are dealing face to face, if we really want to deceive the other side, we may avoid doing it. Number one. Number two, and this is very interesting. There was a very, very interesting experiment done in one of the universities in Netherlands a few years ago. And in that experiment, it was seen, it was observed how liars behave when they negotiate. Now, in general, you can again use chat. I just want to know, how do you see a liar? How do you detect that, hey, this person is lying to me? What do you do? Or what tells you that this person is lying to you whenever you are talking to someone or negotiating? BC says fidgeting. That's very true. Fidgeting, inconsistencies. Avoiding eye contacts. That's a very common. Yes, some of you have said avoiding eye contacts, not maintaining, stable eye contact. Wonderful. In fact, these are global indicators of lies. Not looking in the eye of the other person and being very fidgety, moving hands and feet and all. In the experiment that was conducted in the university in the Netherlands, yes, liars had a different behavior with respect to their movement of eyes and movement of hands and legs. What was the difference? The difference was that liars actually had a better eye contact, and liars were more calm. They had more calm hand and leg movements. Why? Because everyone knows that everybody else knows that liars have a bad eye contact. So when I want to lie, instead of moving my eyes here and there, I would rather look into the eye of the other person and tell a lie. And this is something that has been observed in experiments, in negotiation. So face misleads at times. Some of you are pointing out that stories don't add up. I agree with that. Often in a negotiation, when you ask the same question in a different way, you ask triangulating question, you ask questions for which you have other sources to confirm the information, that is something that is going to be a lot more reliable than just believing that, oh, I know this person is lying because her or his eye contact is not good enough. And that's why deception in negotiation, in face-to-face negotiation, often it is not so clear whether we can detect a deception or not. In fact, the most reliable behavior for detection of deception is voice-related behavior. Somehow liars, professional liars, they can control their face, but I think many of them cannot control their voice. Their voice tones are a lot more flatter than the non-liars. So often in negotiations, we give this advice to our participants in programs that, well, when you have a trust issue with the other side, try to use every possible source, every possible channel of communication. Don't just rely on emails. Don't just rely on face to face. Use everything so that you have enough space to understand what the other side is really trying to convey. Often there are cultural barriers, and there are certain cultures where people are not able to communicate everything in face-to-face conversations. When I was at Northwestern in Chicago, I had a friend who also happens to be a professor of negotiation in China. So he used to tell me this thing. He used to say, look, if you ask for my car, I will say yes, but I will hope that you know that actually it's a no. That was his communication style. Even when he wanted to say no, he used to say yes. And he expected me to know that actually it was a no. So it is important always to make sure that when there are cultural barriers, when there are barriers of negotiation traditions, it is important to explore all the possible sources and all the possible channels of communication. In fact, there is a term called social contact. Now, in the COVID times, the meaning of the word social contact has completely changed. But this term already existed in sociology and in psychology, where it said that when you go from a low to a high social contact, the negotiation performance changes. There are negotiators who do very well when it is face to face, and there are negotiators who do very well when they negotiate through email. It is important, however, to be good at negotiating in every situation. Now, the next stage. So first stage is the channel of communication. The next stage is the very information itself. What is the problem with information that we receive? So here we have another challenge for all of you. Our friends who are, physically present, maybe you can share your answers with someone who is also accessing the session through chat and can give us the answer. But here is the question. The question is, which one is a bigger number? Just whatever comes to your mind, write down straight away. Do we have, just write A or B, it will be easier. Do we have more words in English language that start with the letter K, like kilo, king, Kenya? Or we have more words that has the letter K as the third letter, like awkward or doctor, if you don't know how to spell doctor? What do you?
Can I answer that, Professor Meta? I think it's A.
Words in English language that start with the letter K are more than, and in fact, here there is an overwhelming majority. Almost everyone says that A. Somebody said that doctor is spelled with C. Yes, actually, but I'm so bad at cracking jokes. It was a joke and it did not go well. So yes, you are absolutely right. Okay, now actually there are 3 times more words that have the letter K as the third letter in the word in English language than number of words that begin with the letter K. Now, why did we all think that words that start with K are much higher in numbers? This answer changes when I, instead of giving awkward as an example, I take an example like, words like take or make or bake or cake or lake. The moment I change the example, the answer also changes. What does this tell you? What does this show? This is also known as availability bias. Often in a negotiation, the information that is provided, the information that is presented is the information that we take as the complete information. And that is something that we have to think about. The information that we have in front of us, is it complete information or not? Is this something that is lying beyond this? Is there something that I am missing here? And that question we always need to ask ourselves before every important negotiation. Okay, let's move on to the next important question. Here, you are a healthy eater, and Tega says, my name also starts with K, so that created a bias. Yes, I'm so sorry. Okay, let's look at this question. You are a healthy eater. You want to buy cheese. Which one will you choose? 98% fat free or the one that has 2% fat? Very quick.
Prof, I think I'm going to speak for majority, logged in right now, 98% fat free.
Percent fat free. That's wonderful. However, here's some friends who have figured it out. They are telling us that, well, actually they are the same. Yes, they are actually same, 98% fat free or 2% fat. However, when this question was asked in an experiment in research, most of the participants, they went for 98% fat free. Not only that, let me show you something else. Which one will you go for, 98% fat free or 1% fat? 98% fat free or 1% fat? Which one is your favorite? Of course, now here we have a very brilliant audience, and so everyone has figured out the wordplay, and that's why people say, well, 1% fat. But in the experiment, what did researchers find? They found that most participants still wanted to go for 98% fat free, while the other one is actually better. Why? Why this happens? Why participants, when they were shown 98% fat free and 1% fat, or 98% fat free and 2% fat, they consistently went for 98% fat free? Because as some of you are pointing out, because it was fat free. Because the participant was in the mindset of this healthy buyer, healthy consumer, who was looking for the fat free. Fat free speaks the language that I understand. 1% fat is something I don't understand. I don't want fat. I want fat free. 98% fat free. So the way in which the information is not just information that is available, but the way in which it is presented is also creating my response. I will ask you one more important question. And this question will require, a couple of minutes. So I will give you a minute to think properly. A country is preparing for outbreak of an unusual disease. Well, that it expects will kill 600 people. There are two programs, A and B. Which one shall we favor? If we adopt A, now listen very carefully. If we go for A, 200 lives are going to be saved. If we adopt B, there is 1/3 probability that everyone is safe and 2/3 probability that nobody will be saved. A, where 200 lives will be saved for sure, or B, where there is 1/3 probability that, everyone is safe, but there is 2/3 probability that nobody is saved. Which one shall we go for?
A.
A lot of A's here. Somebody said A because it is saving lives for sure. Yes, we want to be sure that we at least save 200 lives. Okay, this is another problem. Now pay attention here. A country is preparing for an outbreak of an unusual disease that it expects will kill 600 people, again 600 people. And here we have two programs, A and B. If we adopt program A, 400 people will die for sure. But if we adopt program B, there is 1/3 probability that nobody is going to die, and there is 2/3 probability that we will lose all 600 people. Which one shall we go for? Where all 400 lives are lost for sure, or where there is 1/3 probability that nobody will die? Shall we go for A, where there is 400 lives are lost, definitely 400 deaths, or the program where there is 1/3 probability that nobody dies? So here we can see that now there are a lot more answers. A lot more participants are now pointing at B. And in fact, whenever this question has been asked in research, this question has been asked in research for many years. And here is the trend that we see. Whenever we show, now some of you have already figured it out that actually it's the same question. It's the same data, that we have one program where we will save 200 lives, lose 400 lives. Another program where there is 1/3 probability that 200 lives, that everyone is safe, but 2/3 probability no one is safe. So finally, the data is same. But when we talk about saving lives, you can see that 76% they go for A, something that is sure. But when we talk about losing lives and deaths, 87% they want to take a chance and want to go for the other program where there is a probability that everyone is safe. It's the same data, but just changing the way in which it is presented. When I am asking you to take a decision on number of lives saved, you are going for something that is sure. When I am asking you to take a decision on the basis of number of lives lost, you are going for something that is not sure. You are ready to take risk. People take risk when it comes to losses because we want to get out of them. But people do not want to take risk when there is a sure benefit. This is also known as framing bias. When I'm telling you that here is 98% fat free and here there might be some fat, you want to go for 98% fat free. Why? Because it is a sure benefit. You don't want to take risk because there might be some fat. In order to understand the framing bias, it is important to see how information is presented to us. Often, for example, a couple of days ago, my wife told me that, look, she received this email and she said, look, if you buy this tie now, you will save 300 euros because it is worth 380 euros and today they are selling for 80 euros only. I said, if I don't buy the tie at all, I will save the entire 380 euros. In the end, we bought the tie because that's what you do. You do the right thing. So, framing bias. Whenever the information is presented, using your needs, your advantage, you are more likely to respond to it positively. And that's why, in any negotiation, to be more effective, to be a better negotiator, we need to present information using the needs of the other side, using the perspective of the other side, speaking from the point of view of the other side. And in order to do that, what we need is we need the perspective and the point of view of the other person. We need to know what the other person really needs. What is it that the other person is really looking for? And only that will tell us how to present that information. And only that will get us a positive response from the other side. In fact, let me go a step further. How do we take decisions? Here we have a very simple challenge. It has nothing to do with numbers. This is much easier. A person has been chosen at random from a set of 100 people consisting of 30 engineers and 70 lawyers. A person named Jack is randomly chosen from the group. He's 45-year-old man. He's married, has 4 children. He's generally, very meticulous, careful, ambitious, has no interest in political or social discussions, and spends time on his many hobbies, which include, sorry for that, which include home carpentry, sailing, mathematical puzzles. Now, my question is Jack an engineer or a lawyer? Is Jack an engineer or a lawyer? Okay. Is Jack an engineer or a lawyer? And here we have a huge majority telling us that Jack is an engineer. I don't know, Ms. Bisola, what is the general's feeling in the room?
I think here he's an engineer.
Here, now the thing is, why do we think that Jack is an engineer? In fact, some of you, if you want, you can also write down in the chat, why do you think Jack is an engineer? Deborah says, can't say. Yes, Deborah, I completely agree with you because I don't know Jack either. But as some of you are telling me that, you are looking at mathematics. Somebody said home carpentry. Somebody says lawyers are always interested in discussions. What we are doing is we have a theory. We have a social theory and we are using it here. But look at the numbers. Out of 100 people, there are 30 engineers and 70 lawyers. Who is Jack more likely to be? He's more likely to be a lawyer. There is a 70% chance that he's a lawyer than an engineer. In fact, a few years ago, when I was doing a workshop with, with a financial institution here in Spain, one gentleman said that he is a lawyer, and I said, why? He said, because this is how my father was, and my father was a lawyer. Somebody who loved maths, loved carpentry, did not like social discussions. The thing is, often we generate these social theories, and these social theories, they affect our negotiations a lot. Because often in a negotiation, they come out as affiliation bias. How does affiliation bias affect our judgment? Let me give you this example. There was a study done in Kennedy School of Public Administration in Harvard University. So these are all bright students of Kennedy School of Public Administration, and they all were given the proposal that Soviet Russia, USSR, had given to United States. This happened in 1987, before Reykjavik summit. So ex USSR gives this proposal to US, and that proposal was given to these bright students. Some were told that, look, this is a proposal made by United States. Some were told that this is a proposal that has come from the USSR. And look at the results. Group B, the group where people thought that actually it was a proposal made by President Reagan, 56% of them, they thought that it was actually benefiting United States. The group where they knew the truth that actually it was a proposal that had come from USSR, most of them, well, 46% of them, they thought that it was neutral. The same proposal without changing a single word. But the person who was making the proposal, just changing that information, it changed the perception of everyone. And that is something we have to be very careful about in negotiations, especially when we are dealing in big corporate deal making environment. Who is representing our organization? Who is representing the other organization? Are there any affiliation biases involved? For example, once we were talking about investment, once I met, so every year from our school, we take a group of students and we go to Silicon Valley, and we meet investors and we meet companies, and there was one Silicon Valley investor. He said that every time I come across an ex consultant, I reduce the projected figures by 40%, because he had this bias about consultants. He said that, well, consultants are very good at making these beautiful presentations, but that's why I am always a bit concerned with their projections. Now, he may be right, he may be wrong. It was based on his life experience. But the thing is, how often we become, and, those of us who come, for example, I am from India. When I left my country for the first time, and I came to Europe or later went to the United States, I often saw that there were a lot of, misconceptions about the country. A lot of people did not know a lot of things about country. I think some of you who, when you left Nigeria for the first time and went, came to the Northern Hemisphere, you probably had a similar experience. And these affiliation biases, they also affect us in negotiations. That's why we have to be upfront about that. We have to be forthright about them. If I just want to summarize what we have just discussed, these 4 important blind spots, they do not allow us, number 1, to get all the information, and number 2, they do not allow us to interpret all the information properly. That's why what is needed is always to understand that when we negotiate, we might be subjected to these biases. So this awareness itself takes care of many of the biases. In fact, late Keith Moornihan, a very famous economic psychologist, so I was in his class once, and he said this very interesting thing to me. He said, biases are like allergies. If you know that you have an allergy, you cannot really cure that, but you can always avoid that. If you know that you are allergic to fruits and nuts, dry fruits and nuts, you will not eat them. Similarly, if we know that we might be affected by availability bias or the framing bias. When we are looking at the information that is presented to us, we will be more careful, we will be more watchful, and we will be more concerned about the way in which we take decisions. That's why, in the end, some of the quick steps to overcome these biases. The very first one is preparation. There is no substitute of preparation. Goal setting in negotiations is very important. In fact, studies have shown that negotiators that set learning goals, so negotiators who say, next time I want to present myself better. Next time, I want to make a better offer. Next time, I want to listen to the other side much better. Those who have learning goals, they not only do better deals, they also have more satisfaction in their negotiation. Asking and listening. It is very important to know the needs of the other side. It is very important to listen to what the other side is telling us. Once we listen to that, it is important to frame our negotiation using the advantage of the other side. So whenever we make it a point that yes, I'm going to frame my negotiation using what the other side wants, we will force ourselves to listen and to frame our negotiation properly. And last but not the least, a feedback mechanism. If you are negotiating in a team, always make sure that once you finish the negotiation, you give feedback to each other. If you are negotiating solo most of the times, have a feedback mechanism where you write down what you did, what went well, what did not go well. Because one of the most effective ways in which executives improve their negotiation skill is through analogical feedback. That means today I negotiated with this gentleman, this is what happened, next time I should be careful. Next day, I write again. Today, I negotiated with this lady. This happened. Next time, I should be careful. When I keep maintaining such records, such diary, I will be able to see a pattern. What is it that I'm doing right? And what is it that I'm doing wrong? And that will give me a better insight. And that will make me a daredevil. So, well, I would stop here. And I think there are some questions and answers. So let's take quickly some questions. And and well, let me know whenever it is the break time, because after the break we will continue this conversation. So let's see if there are certain questions. I will stop.
All right, thank you very much, Professor Mehta. I learned a lot about negotiation. Thank you, and I know that there's still more to come when we move to the second half of your session, negotiation and women. Um, I know that we have one question here, anonymous attendee. But first, let me tell you, I really enjoyed your exercises. It just made me think better, and hopefully, I will apply all of this or these when negotiating. So, thank you very much for those exercises, and I hope there's still more to come in the second half. All right, an anonymous attendee says, how do you handle negotiation successfully when you have a lower negotiation power?
That's a very good question. The thing is, power in a negotiation is very dynamic. There is no static power. You have to understand that if there was absolute power, there would be no negotiation. That means, in case of absolute power, one side says, do this, and the other side says, okay. That's why. The strategy number one is always try to find out what are the sources of power. You are negotiating, that means there is something that you have to offer. You are creating value for the other side. Try to see what value are you creating. The fundamental source of power in that sense is the alternative that you have and the other side has. Maybe you have an alternative, but the other side does not. So always think about the alternatives. What will I do if I don't agree with them? And what will they do if they don't agree with me? Number one. Number two, if there is absolute power, for example, let's say you have a conflict with your boss, and Will you go and I had long back, I had a boss who used to tell me, in fact, on the very first day of my job, told me that, look, a few months ago, there was a boy who was working here. He resigned because he could not handle working under me. And then there was this lady who also resigned because she could not work with me. I am so demanding. And then he actually counted, number of people who had resigned. I was like, is this something to be proud of? Like, people who work with me, they resign. But actually, that was the case. There are people who actually, enjoy using that power. What do we do with them? Well, there are two ways we can deal with them. Number one, take power out of the equation. When can we take power out of the equation? Well, we take power out of the equation when it is not a negotiation. That means try to frame your negotiation as a conversation. Try to make it a conversation. And when you make it a conversation using the perspective of the other side, it works. Number two, what really incentivizes someone to use power? For example, when you, let's say, when you ask someone, will you do this for me? You are giving that person a chance to say yes or no. You are giving that person, please give this to me. Please give me $100 or please come with me. Whenever you ask for something, whenever you claim something, you are giving the other person a chance to say no. And that is power. Ability to say no is power. How can we take that out? Well, instead of claiming, try seeking. A candidate a few years ago did a wonderful thing in a job interview. She had these two jobs. There was one job which was paying very good signing bonus. The other job was not paying the same bonus, but she wanted to work in the second company where they were not paying the signing bonus. She called, she said, well, can I have signing bonus? The person who attended said, sorry, we don't have that policy. If you are not interested, tell us that you are not coming and we will offer the job to somebody else. Well, she went. She claimed she was rejected. She went to talk to the person who was going to be her future boss. She said, look, I really want to work with you. I'm so excited. I just want to get your advice on something. When I will start, I will have these issues. I will have these problems. What would you suggest? What would you advise me? How can I manage my finances better? And in the end, the solution was actually not really signing bonus, but some help, almost equivalent to the kind of signing bonus she would have received elsewhere. Instead of claiming value, she sought advice. Can you give me advice? Can you tell me what is better? Can you please help me with this? The moment I'm sorry, somebody said we lost audio. Okay. So the moment we frame our negotiation as, instead of claiming value, seeking advice, it becomes a conversation. And that takes power out of the equation. And the third and very interesting strategy, which works in deal making especially, is multiple offers. When you do not know whether the other side has enough trust in you, when you do not know whether you can build a relationship of trustworthiness, when you don't know what are the priorities of the other side, what you can do is make multiple offers at the same time, which are equally good for you, but they may have different values for the other side. It's like, I have a 3-year-old son and it's very difficult to make him eat at times. So what my wife does is, instead of saying, hey, would you like to eat? Please eat this or please eat this, she says, what do you want? Noodles or pasta? And he would say, noodles. Job done. Instead of making a single offer, make multiple offers, multiple issues. When multiple issues are there, there is better exchange. You are actually giving more authority to the other side, At the same time, their exercise of authority is not hurting your objectives. So I'm sorry it went into a little bit of detailed explanation, but that was a very important question. So let's see if we have any other question.
We have quite a few, Prof. There's one here from Blessing Sonia Boulogne. Great presentation, sir. What move should a negotiator never make?
A negotiator should never make. That's a very, I mean, there have been PhD theses written on that question. What is that one strategy that is never good? There are quite a few that are not good strategies. So one particular strategy that we should avoid, especially in this age, is making false claims or giving information which is not true. I mean, for example, once I was negotiating with this organization. They wanted to do a little bit of research, kind of a collaboration with our school. And I said, look, this is how, we do research, and these are the steps, and this is the cost. And the other person said, well, if that is the quotation, then we may have to do like an auction, and we may have to invite, consultants. I was like, look, if that is what you have to do, you go ahead. And but I cannot really change rules. We have to live by these rules. And I will help you as a friend, but I cannot do anything, unfortunately. And after that, all that talk about auctions and, price competition, etc., it never came up in the subsequent conversation. So using bluffs is often very dangerous, because if a bluff is caught, or if giving information which is, I mean, we have seen that our friends in human resources in different companies, they share these experiences. A friend of mine, he once told me that he had a candidate that he was interviewing who said that he had a job offer from another company, and this friend of mine, he said that's impossible. The candidate said, why is impossible? I have a job offer. He said, and this friend of mine said, because I was working in that company 2 months ago, and this year there have been no campus recruitments. So it is important always to make sure that we don't use false information loosely, especially in this day and age where, personal branding is as important as corporate branding. Every negotiation you do, it adds to your personal prestige. And second behavior, which is again where we should be very careful, is using threats in a negotiation. Take it or leave it is often a very counterproductive move. Instead of going as extreme as take it or leave it, it is always important to see how can we still make it attractive and interesting for the other side using their perspective, instead of, you know, using an extreme threat. But thanks for that question. In fact, there are many other, and we can just continue this conversation, but these two just are the most important ones. Any other question?
Yes, we still have some more questions here. This is from Olufemi Olutuibi. As professionals, you are expected to demonstrate a certain level of professional skepticism. How do you marry this with the biases mentioned in negotiating?
That's a very good question. And in fact, skepticism actually is like uh, is like an antihistaminic if biases were allergies. Skepticism helps you overcome biases because you are constantly questioning. However, skepticism, when it crosses the limit, it also creates a further bias. For example, um, often in negotiation, we hear negotiators saying, oh, he's impossible to negotiate with. And we say, what does that mean, that he is impossible to negotiate with? Or often with our kids, we do that. Oh, you are so annoying. My daughter of 5 was telling my son, oh, you are so annoying yesterday, last night. I was like, no, he's not annoying. There is something that he has done which has annoyed you. So talk about that. So skepticism is very good because it always helps you question whether you have enough information or not. However, that skepticism should never become a dispositional judgment about the individual that you are dealing with. For example, you should because extreme skepticism creates affiliation bias. So it is important always to stay focused on information we have. But when it comes to being skeptic about the other person, it is important always to focus on behavior. What is this person doing? What is the behavior that I'm receiving? And how is that affecting me? The advantage of that is that when we negotiate, instead of focusing on individual and their characteristics, we stay focused on the dynamics of the negotiation only. So skepticism is very good, but make sure that that skepticism doesn't translate into value judgments about the individual. And when it comes to individuals, we stay focused on the behavior. But otherwise, skepticism is very, very good, as long as it is about information.
Right, thank you very much, Professor Meta. Thank you for this first session, The Art of Negotiation. I know that there's still so many questions to be answered, but we're going to go on a little break now. And when we return, we'll still have Professor Meta talk about negotiation and women. And this is something you do not want to miss, because every woman at some point in time in our lives, we've negotiated. I think this morning I also did a bit of negotiation with my daughter. What are we doing? What are we eating today? How and why do you want to eat this and all of that? So it's important for us to learn more on this, especially for our businesses. So don't go anywhere. We're going to be going on a little break, and we still have so much more to come. Winners of the seed fund will be announced after their pitch, and we'll know who would come first, second, and third. Our judges are also here with us, so I can't wait to introduce them and so that we can pick our winners. We still also have entertainment. Yes, Chike would be here to perform. So the boos, he's the boo of the booless. So if you are booless, please just stay with us. Chike is going to be your boo after this wonderful webinar. So yes, if you need to refresh yourself, take bathroom breaks, come back with some tea, coffee, anything that it is you need to be comfortable for the rest of this conference, please do so now. We'll be going on a little break, and we have DJ Nana here with us at the live audience, and you virtually, you can enjoy yourself listening to some lovely music by DJ Nana. Thank you.
Get up and make a move.